Morning, everybody. Welcome back to another episode of the Market Open. It is Wednesday, April 29th, and we are live. It is one of the most important, and quite frankly, in my opinion, I think it's going to be one of the craziest days of 2026. Quite frankly, it also might be one of the craziest days of the past couple of years because we have not had Microsoft, Meta, Amazon, and Google all reporting on the same day on top of a Jay Powell Fed meeting, which is going to be his last Fed meeting. So it's going to be a long day. It's going to be a busy day. We're going to have a lot to talk about, a lot to get into, lots of emotions going back and forth, trillions of dollars of market cap going up and down based on companies missing or beating on revenue. In the morning, we did have SoFi earnings. We had Robinhood last night. We will spend the first couple of minutes of the Market Open today discussing SoFi and Robinhood. Obviously, it's not pretty. And, I think there's a lot of different things to talk about in regards to why it's not pretty. But the truth of the matter is, I don't think people care that much about the reasoning behind it. The point is, it's not pretty. SoFi down 8.5% as we get started for this Market Open. There are stocks that are up based on the earnings we had last night that did not have to do with fintech. And we will talk about those stocks and those sectors and how they're doing because they were having a pretty green pre-market. But unfortunately, the fintech names are not. SoFi right there down about 8.5%. Robinhood down 11.5%. Obviously, it's not fun. Car is down 18%. One of the big hedge funds, it was finally released, the name of the hedge fund that has been selling their shares, down another 18%. You might be in SoFi, you might be in Hood, but at least you're not in Car. At least you're not in freaking Car. 18% down. This one, obviously, from $800 to $147. Ugly day for that one. But Hood and SoFi, we're going to start off our discussion with that. SanDisk up 6%. Seagate crushed it last night, up 15%. Micron, as a beneficiary of Seagate, getting the bid right there. That's up 4%. Bloom Energy is just an unbelievable quarter. They crushed every estimate. The market does not care at all about valuation. That's up 19% on Bloom Energy after it was already up 150% year to date. So now it's up almost 170% year to date. Just a massive, massive move. Nokia getting a little bit more of a bid. Teradyne, unfortunately, didn't have the best quarter. A company that's similar to Air Test Systems. This one down 9%, but they were up 90% going into the print. Air Test Systems up about 1%. So we're going to get started with the fintech coverage and get into it. I know Tanner has been streaming all morning, and he hopefully broke down enough of the kind of major headlines around SoFi. I went through the quarter as much as I could. I don't think I'll have as great analysis as Tanner and the other people that cover SoFi will, but we're going to try to break it down to the best of my ability. Obviously, I know Robin a little bit better, so we'll talk more about that. But I think the broader theme right here is that right now, these companies that are not in the space that the market cares about, AI and data centers, are just not catching a massive bid. Now, some of them are, if they're unbelievably destroying earnings, like a Visa or a FICO last night, which actually ended up doing a really good job on earnings. They were in a downtrend, crushed earnings. They're back up. But the story right now is Micron, it's Seagate, it's Western Digital, it's Bloom Energy. It's AI infrastructure for data centers. It's not fintech right now. And unfortunately, that's why those names are getting hit. Nebius is not today. I know some brokerages said Nebius was going to be today. Nebius is not going to be today. I believe it's in like a week or two. So we are not going to have to worry about Nebius here. All right, let's get into it. Good morning, good morning, good morning. Thank you, everybody, for being here. It's going to be a crazy day. I will not be live all day. We're going to do the Market Open. I'll probably stop at around 11:30. Then we're going to take a 2-hour break. We'll have Jay Powell at 2:30, and then from Jay Powell, 2:30 to basically 7 o'clock, we'll have earnings. Jose and Neil will be with me. Tanner is going to be streaming Google separately, so we're going to try to cover as many earnings as we can. Obviously, we got a lot of them today. This is honestly, I think, going to be one of the craziest days of streaming I've had in the past 4 years because of how many companies that are so important are reporting in one day. But that'll be the schedule, and we'll keep going from there. Benny, what's up? Blake, good morning. Gene, what's up? What's up? Mr. Limey, OTT Mindset, Wander with David, Chels, Tech, Chris, PJ, Smackdown, Wizard, Dark Slay, Ultimate Cow. Thank you for being here. Benj, In the Streets, Jan Chose, Kane Thomas, Port Coin, June, Vi, Rishi, Joy, Jesse, Danny, what's up? Jasmine, DJ Variable, thank you all for being here. Let's get into it. All right, so let's start off with SoFi and Hood. First of all, I just want to say on a day like this, I know retail is heavy in SoFi and Hood. Obviously, Hood being a massive position for me, have a little bit of SoFi, but Hood is obviously much more weighted in my portfolio versus SoFi. But I'm feeling the same pain because both stocks are down pretty heavily in the pre-market. It's one of those days when you're very heavy in a stock, or there's a lot of retail that's heavily allocated in a stock, and you have to kind of understand the underlying logic and foundation for why these names are down. You can't get too upset. You can't have too much of your mental stamina be focused on a name that you're not in that is up 20%. And it happens to everyone. It happens to me. It's inevitable. It's, there's always that shiny object syndrome. But at the end of the day, we're all adults. We have to live with the consequences of our actions. And if you chose to invest in SoFi over Bloom Energy for whatever reason that you chose, you can beat yourself up about it as much as you want. It doesn't matter, right? Right now, you're not in the name that is taking off. And at some point last year, these were the names that were taking off. Hood and SoFi were moving like crazy, and maybe a Bloom wasn't. But the point is, this year it's the opposite. And this is kind of what we have to deal with, right? Because it's not something that we can drive ourselves crazy around. Otherwise, we would want to be in every single stock that goes green. And maybe that's a way to kind of cope around the pain of being in it. But nonetheless, I do think it's important to address that, because on a day like this, when everything is up and you're in the name that's not up, it sucks. But nonetheless, there's a reason why you picked that name in the first place, right? So it requires sort of calmly addressing why those names are down and why those other names are up. And I think the sort of core reason for SoFi and Hood, at least, well, let's start off with Hood and then we'll get into SoFi. Hood did not have the best quarter. And I think that's the first thing to kind of make sense of. Duns, happy birthday. Just seeing your super chat right here. It's my birthday, so hopefully earnings will be a beautiful gift today as well. Happy birthday. Thank you for being here. I know you've been part of the channel for the past couple of years now. Yeah, the best birthday gift you could get is Amazon, Google, Microsoft, and Meta crushing it. Maybe their stocks don't go to the moon, but hopefully they crush earnings and eventually their stocks re-rate. Meta and Microsoft trading at their lowest multiples in literally 4 years. We'll talk more about the big tech companies in a minute, but hopefully we get some good earnings as we get into the market close. So let's start off with Hood. Hood just didn't have the best quarter. They miss, and this is what we were talking about yesterday. A lot of questions on, hey, how do you think Hood is going to do? As someone who's been analyzing this company since they were $6.50, my thoughts were, I don't think they're going to have the best numbers. And unfortunately, they didn't just have the best numbers. They had worse numbers than what the street expected. Street originally expected 1.3 billion. Then they lowered that down to 1.14 billion. Now, Robinhood came in at 1.07 billion. So Robinhood grew 15% year over year, which I'm sorry, it's just not real growth. It's just not. It's not enough growth to get the street excited about. Yes, they're doing $1 billion. Yes, they have 18 billion in net deposits. Yes, asset platforms are up 40%. Gold subscribers up 36%. All that stuff is good, which is why I think the quarter itself was not absolutely horrible. But top line revenue growth on EPS and revenue wasn't there. It just wasn't there. So as a result of that, if Robinhood came in lower than the lowest expectations, yeah, it's obviously going to take a hit, and the street's not going to necessarily be happy about that. The other problem with Hood is that not only were they down, but there were certain metrics where they didn't really live up to the expectations in a supreme way. So for example, they increased their adjusted operating expenses guidance for the entire year. Now that's driven by certain investments that they're making that they have to make. For example, the $100 million investment they're making in Trump accounts, which is super important. But unfortunately, it leads to less EPS growth. And as a result, you're seeing the pain right here that you have on the screen. The long-term thesis on Hood, I think, is very strong, very intact, very fine. You've got to, remember on these days how much the long-term thesis matters if you are actually in a company for the long term. But the short-term thesis is, I think the stock is going to be stuck for the coming months unless the bull market comes back in a meaningful way. Now, some people might be asking, well, we're at all-time highs. What more do we need? That's a great point. I think that's a great point. It is very disturbing that SoFi and Hood cannot get to even half of their all-time highs, even though the market's at all-time highs. But then that begs the question, why are the markets at all-time highs? And the reason the markets are at all-time highs is because of data center infrastructure and AI technology. It's not because it's a raging bull market where everything's going up, which is kind of how it was in 2024 and 2025. This is a more selective stock pickers bull market. And unfortunately, the winners of last year, a Hood, a SoFi, a Rocket Lab, they're not winning this year. And, this is kind of a theme that we've been talking about for the past couple of weeks right now, which is that a Seagate or a Bloom Energy, which it's just hard. I mean, if you bought Bloom Energy yesterday before the print, congratulations, but you would have had to buy it up almost 150% on the year. It's not easy to make that type of decision. Micron right here at 500. Again, the memory thesis becomes stronger and stronger and stronger, but put in the chat if you are buying this stock freshly new in your position before earnings. I am very curious who is taking that level of risk. And it might not even be that risky. When you look at the multiples, you look at the story, you look at NAND, DRAM, HBM, like you put all those things together, it's probably not that risky. But then again, who's doing it? Same thing with Intel when it was at $67. It's actually much easier theoretically for a investor to be like, I'm going to buy SoFi down 40% on the year instead of SanDisk up 300% on the year. But what's probably going to happen on Thursday? SanDisk is probably going up. And I can say that in the abstract because I'm saying probably and I have no stake in it. But if I actually put my money towards it, it's a whole different thing versus me saying it's probably going to go up. Because conceptually, Micron should go up if Seagate crushed it the way they did, if Bloom crushed it the way they did, if Western Digital crushed it the way they did. But am I willing to put money behind it? And I think that's why it's really important to recognize the reason you might have been willing to put money behind a Hood or a SoFi or Rock Lab is because they're down on the year and you understand them as fundamental companies. But their charts also looked ugly. And because their charts looked ugly, you were like, oh, this is an opportunity. The charts that look amazing are theoretically not the opportunity, but then they become the opportunity. And that's kind of the point that I'm trying to make. A SoFi and a Hood, even with decent earnings, SoFi we'll talk about in a second, have no match for a company like a Bloom that's up 150% and then just crushes earnings, like demolishes it. And now it's up, 170% of the year at 273. Is that run sustainable? I don't know. Time will tell how much the street really wants to pay up for that level of premium on the growth. S&P 500 basically flat right here in the pre-markets. But right now, that is what the street is doing. That's where the capital is going. And I think everyone is afraid of something like a Poet, a 40% drawdown happening in a day. I don't think a Bloom or a Seagate's going to have a 40% drawdown, fundamentally different companies than Bloom. But the idea that they could have a nasty pullback is what scares people. The problem is the companies that have already had a nasty pullback are continuing to pull back, which is why it's not fun, right? Which is why it's not fun. And, I sympathize with everyone who believes it's not fun. So that's what we had on Hood. Ultimately, I thought it was a good quarter. I just don't think the revenue growth was strong enough to justify this. I would not be surprised to see Hood go below 70 today. I just wouldn't be. I mean, you can't be growing 15% and trading at 35 times earnings. Like you can't be growing at less than half of the earnings ratio that the street is giving you. Now, I think the April quarter is going to be a lot better. They mentioned a lot of the metrics for Q2 coming up that were very strong, but unfortunately Q1 just wasn't good. I think a lot of us knew that already. We saw the numbers going into the print, and it was materialized with these numbers that didn't end up being the way that they needed to be for the street to be excited. SoFi, on the other hand, and again, I haven't gone through every little nuance of the quarter. I'm sure Tanner is going to have a lot more details on this. SoFi, I don't understand why it's down so much. They actually had a better quarter than Robinhood on the top line metrics. I mean, they beat on revenue substantially by about 4% right here. EPS came in line, so maybe they could have had a better beat on EPS. But revenue's up 41% year over year. EPS is up 100% year over year. Robinhood was up 2% year over year on EPS, and it was up a measly 15% year over year on revenue. So, I mean, SoFi absolutely crushed it, and as a result of that, I think they deserve to be getting a premium. I imagine the street once again is concerned about the issues Muddy Waters brought up around accounting. Now, I haven't gone through the deck fully to understand exactly what or if the concerns were addressed. I think there were certain parts of it that were addressed, certain parts of it that were not addressed. And as a result, you have some issues right there. But these top line metrics, they just don't scream a company that should be down 9% on the day. Adjusted EBITDA up 62%, members up 35%, loan originations up 68%, guidance revenue 4.65, street wanted 4.61. So, I mean, it was good. It was not a massive beat, but it was okay. Net income margin at 18%. This is something that I think SoFi really needs to make a lot better. Robinhood's at 40%. If SoFi can get that up, that would show they have operating flexibility and elasticity in their margins, which would obviously be very good for them. But right now, it's just not there yet. Members, they're guiding for 30% year over year, adjusted revenue growth of 30% in Q2, EBITDA growth of 30%, and then net income margins of 12 to 13%, which are actually lower than what they were in Q1. I think the biggest issue right here, once again, is the tech platform not meaningfully growing year over year. As you can see right here, tech platform revenue is actually down 27% year over year. You're just not having massive growth in the type of business that needs the growth in order for SoFi to win, which is, I think, this whole AWS of fintech. I mean, the AWS of fintech stuff isn't even talked about as much as it used to be talked about. And unfortunately, the lack of conversations around that is what's causing a bit more pain. And as a result, I think that's why we're seeing the street basically say, look, you know what, we can't give them the level of excitement that we can give a Seagate or a Bloom Energy. Again, all those metrics I mentioned, none of them are horrible, none of them are bad. They're just not massively exciting. And same thing for Robinhood. They weren't massively exciting. And same thing for Spotify yesterday. Totally different business, but they just weren't exciting even though they had a beat. And so I just think across the board, if you are not absolutely destroying earnings, and SoFi didn't absolutely destroy earnings. They had really good revenue growth at 41%, but the quality of that revenue, if it's tied to credit versus the fintech part of the business, which again was kind of the core reason I think a lot of people got excited for it, this fintech of AWS type of thesis, then that quality of revenue is being discounted. Robinhood has really good quality of revenue, but they have the opposite problem. The volume of revenue is not growing the way that it was growing back in 2024 and 2025. And so when you put those pieces of the pie together, where does the money go? It goes to Micron. It goes to Seagate. It goes to Bloom Energy. Why is it going to Seagate, Bloom Energy, and Micron? Let's talk about those right now. By the way, crude's at 103.8, which is not good. We do have some updates on Trump, so let me get through a couple of these earnings, and then we'll talk about what's going on in the macro. Not nice to see oil pumping in the way that it is pumping, but I guess the street is not happy about what Trump said this morning. So Bloom, they absolutely destroyed. They beat by 238% on EPS, 44 cents versus 13 cents expected. Now, again, forget PE, forget valuation, forget price of sales, forget all of that stuff. When you beat by 250% on EPS and 200 million on revenue, which is a 40% beat, EPS now up 1,000% year over year, revenues up 130%. It just doesn't matter. It doesn't matter. You're going to, that stock is going to catch a bid. And SoFi, Hood, Rocket Lab, Spotify, those companies aren't doing that. ASTS, they're not beating by that level of magnitude. Seagate, 17% beat on EPS. EPS up 115% year over year, 410 versus 350. Revenue 3.1 versus 2.96. They beat by 5%. Again, I will say for all the people saying, man, I wish I had my money in Seagate, it is really freaking easy to say that. It is really easy to say that. But yesterday, would you have liquidated your entire SoFi, your entire Robinhood, your entire Spotify, whatever holding you have that's down on the year, to buy this chart at 579, up 101% year to date? Who would have done that? And if you would have, congrats, because you deserve the risk of the reward of taking that type of risk. Last year when Robinhood was up 80% year to date, I was buying more Robinhood, and it ended up working out because it kept going up, right? So I was the one taking that type of risk on the other side of the aisle last year. Same thing with Palantir. But with some of these other plays, you have to, especially because of the nature of cyclicality, which again, I know the pushback to that is that it's not cyclical, totally fair, but nonetheless, that is one of those narratives that is really out there, and no one wants to feel like the idiot who bought Bloom Energy at 80 times price to sales, knowing that there's barely any profit, but like, hey, maybe this thing will keep going up, and then if it doesn't go up, you feel like a dumbass. Like, who would actually do that? Who's going to buy SanDisk before tomorrow, Thursday, up 350%, even though we know it's probably going to have one of the best quarters ever? So I think the way to hedge back against the level of FOMO or just general anxiety that people are feeling of being in a name that's not doing well is, would you genuinely have picked a name that was up as much as it was before the print yesterday? Now, maybe you feel annoyed that you didn't pick SanDisk at 30 in April of last year, but that's there was a lot of discounts in April last year. SanDisk just ended up being one of the best outperformers. Maybe you would have bought SanDisk in January before it went up 300% year to date. Okay, that chart was up 600% over the past year. Be my guest if you were going to buy that stock up 6x going into January. Like, it's just not easy to do these things, even if it's easy to say these things. And as a result of that, I think that's why we're having a broader problem with just seeing all these massive other names go up like crazy, but also being in names that aren't going up, even if they were going up last year. Obviously, the tides have turned on some of these names, and the earnings projections on the names that are already up continue to get better. The earnings projections on the names that are down continue to get worse. And as a result, that is why I think we're seeing this pain on SoFi and Hood. So that's the analysis on earnings. We'll get into some of the macro stuff, but sort of the key takeaway right here, obviously SoFi and Hood can go even worse down today just based on these numbers, is the market cares about data centers. They care about AI. They care about that infrastructure. If you're in a stock that is not in those areas and you are not absolutely demolishing earnings, then you're probably not going to be able to easily catch the bid. And I think that's just a rule of thumb that we have to hold on to. People are pointing to Visa as a name that's like, well, what about Visa? They're not AI data centers, but they went up 6% on earnings. Yeah, but they were down 10% going into the print. So, they had to absolutely crush earnings, which Hood and SoFi did not do. Visa accelerated their TPV for the first time in 4 years, largely led by AI efficiencies to be able to get there, in order for them to get this type of move. And Visa's really been dead money for the better part of a year and a half now. Right. So it got the breakout. SoFi and Hood have not been dead money last year, right? They became dead money this year. But Visa hasn't really made a move, but they had a good earnings beat. And that's why the street really accepted them. SoFi and Hood, unfortunately, did not have a massive. I mean, even Starbucks had a phenomenal earnings beat, given it's Starbucks, right? And you don't expect a massive earnings beat. That's why that stock's up 5%. Hood and SoFi, unfortunately, didn't have that. And that's why they're down. What do you think about Palantir earnings coming up? I think Palantir's absolutely going to demolish it. But once again, they are in software, and we've seen what happened to ServiceNow. So Palantir has no choice but to crush earnings to the point where it becomes undeniable. Their stock is 22% down going into the print, so that is a good thing versus them being at all-time highs. But once again, they are not really in the sector the street cares about right now. The street cares about hardware over software, and specifically hardware that has anything to do with making a GPU be a real GPU, or in Intel's case, a CPU. And every other stock has a much higher burden to be able to outperform in order for it to get any of that love. So that's what we got on Hood and SoFi. Ugly day. I know it sucks for a lot of people. We'll see how the market reacts. Maybe people step in and buy the dip. I don't think both of these stocks should be down as much as they are right now. I could see them going down further. I don't know if Seagate and Bloom deserve to be up as much as they are right now, but I could see those going up further. And in about 20 minutes, we'll see how the market ultimately thinks of this. Okay, oil. So a couple issues with oil right now. Trump tweeted a picture last night, and I don't think it was the most friendliest picture, which is why I think the street's a little upset. So this is a picture of Donnie T holding an AK-47 with the caption, "No more Mr. Nice Guy." And he says, "Iran can't get their act together. They don't know how to sign a non-nuclear deal. They better get smart soon. President DJT." I think this is why oil is spiking. I mean, obviously you had some news yesterday with the UAE leaving OPEC and lack of progress on making a deal. But I think that's not an AK-47. Okay, I'm not an expert on guns. Okay, that's the first gun I thought. I don't know what it is. The point is, it's a weapon. Why do all you guys know what AK-47s are? That's a little concern. Why does everyone here know what is everyone Call of Duty Modern Warfare game players or something where the point is, I think the street's interpreting this as more escalation. And as a result of more escalation, maybe that's why the street's a little upset. Now, granted, he's not literally escalating, but the threat of the potential escalation is, I guess, what is getting the street upset. There's not any other major headlines on oil this morning. Now, it was already in an uptrend from yesterday based on that UAE news. So maybe, it's not getting any solid narratives to counter that. Look at that, 103.9. Back above 100 and the S&P is flat. Like it's going to be a crazy, the S&P is flat. Big tech is reporting. J. Powell might be hawkish and oil's above 100. Last time oil was above 100, the S&P 500 was 670. So, I mean, we're above 7,000 in a healthy way. Oil's above 100. I wonder which one breaks, or do both of them just keep going back and forth and the street doesn't care? But yeah, I think this AK-47 / rifle / M4 / whatever gun you want to call it is the reason. I meant Call of Duty, not Call of Duty. Whatever, dude. You guys know what I mean. You know what I mean. So it is what it is. The other quote that we had last night from the Wall Street Journal, Trump has instructed aides to prepare for a prolonged blockade of Iran, aiming to pressure Tehran into capitulating on its nuclear program. So you also have that headline, which is probably conducive with the meme or picture that Trump tweeted right here, which basically is continuing escalations, even if the escalations aren't resulting in civilian infrastructure being bombed. So Trump tells aides to prepare for a prolonged blockade of Iran in order to prepare Iran to capitulation for the nuclear issue. Trump told advisors in the Situation Room that resuming bombing or walking away was riskier than extending the blockade, which I actually think makes sense. Like, the blockade theoretically is the best non-diplomatic / non-bombing way for us to force Iran to come to the table and actually get a deal, because Iran is running out of storage capacity for all the oil that they are trying to export, that they can't export, that's stuck on the Karg Island because it can't make it through the Strait of Hormuz because we have a U.S. Navy blockade. And, Iran doesn't want to shoot at us because we are definitely going to shoot back. So it's one of those things where it's like Trump is blocking the block, and functionally that actually is creating a lot more pressure for Iran. The question is going to be, when do they come to the table, and when do both sides finally capitulate and give up a little bit here and there in order for them to negotiate? I don't know when it's going to happen. I don't know how it's going to happen, but it is quite phenomenal seeing crude get to these levels with the S&P not even down in the pre. I mean, Seagate's up 15%, Bloom's up 20%, and oil's back above 100. These are high beta stocks. Yes, they're putting up growth, but they're definitely high beta. And so it's almost like the market, once again, is just ignoring it. And really not caring about the level of pain that the market might be inflicting in the context of oil. You also had this piece of news yesterday. Some people won't believe it, but it is indeed correct. Trump will be unveiling a new passport designed to commemorate America's 250th anniversary. His face will be on the passport as well. So this is another thing that's gone viral. I don't think this is really going to affect the market too much, but yes, Trump will be officially implanting his face on the new America 250 passports. And yeah, I don't know if the markets are going to care that much about that, but that was also another big headline yesterday that went viral. So there you go. Anyone wants the 250th version of this new passport, there you go. You got Donnie T right there. That is what it looks like for why oil is pumping in the pre-market. Obviously ugly to see, but not really affecting the stock market. At least so right now. We are in a simulation. It definitely feels like, to an extent, we are in a bit of a simulation right here. Seagate, again, getting a massive move. Not Berkshire Hathaway, Bill Ackman is IPOing Pershing Square today. Wall Street Journal came out and said he's trying to raise $5 billion. It looks like he's only going to get to raise about $2.5 billion. I don't know who the hell is buying the Bill Ackman IPO, Pershing Square. But it's going to be there. And yeah, I want it to go well because I like Ackman, but I'm also just like, who the hell in retail is buying that shit? Like, I don't know. So I'd be curious to see today. I think it's going to go live at around 1 p.m. And so that's another big thing that we've got going on in the markets. We'll see how much that capital, that IPO raises, and ultimately if retail joins. At the state dinner yesterday with King Charles and Trump, you had a bunch of tech people there. Tim Cook, Jensen, Bezos, Lisa Su, Mark Benioff, Sergey Brin, who now is turned into a Republican. There's a New York Post article the other day with highlighting how he is officially turned into a Republican based on this California billionaires tax that he is incredibly upset about. So he's proclaiming his new role as a Republican. But you got a bunch of different people here. And Zucks was not there. At least I didn't see him in any of the different pictures. So yesterday was a big event for a lot of these tech CEOs there. And, maybe it's going to create even better relations with the UK. Obviously, that's why King Charles was there. But the broader market will, I guess, assess, if the earnings are good enough for that stuff to get some momentum. So it looks like that's kind of the main macro news that we have. 15 minutes until the market opens. Again, oil up, I think likely based on the idea of the blockade continuing and Trump kind of tweeting out that picture, potentially escalating things in the eyes of the market. Again, this was the picture right here. Earnings on Hood and SoFi, not the best. Today is going to be just a crazy day with Jay Powell and then the rest of those tech companies reporting. And we're going to see what happens from there. Amit took the photo. Yes, exactly. That's why I was late this morning. I was coming back from DC. What do you think about Hood and SoFi? So rewind for the first 20 minutes. We talked about Hood and SoFi. We'll have my thoughts there. But again, cumulative thoughts. Ultimately, you've got to be in the right sector right now. And that might mean that going heavy in Micron before earnings is the play. But it also begs the question, are you going to do it? And I just don't know if enough people have the stomach to do that, even though you might not need to have a heavy stomach given it's forward PE of 6, but nonetheless, the chart is up there. And when you see headlines like this, TSMC has exited their entire ARM position by selling $231 million of the stock. It's not that TSMC is the strongest company in the world to understand when to buy and sell different positions, but ARM has run a lot. And TSM is taking some profits. They're obviously shifting those shares to someone who thinks ARM is a good deal at 200 when they're getting out at 200. Once again, begs the question, who thinks it's a really good deal at 200, even with the new growth that they put up, and who's getting rid of it saying, you know what, I've made enough money. Is there a real transfer from people who have been holding these names for a long time to people who are just getting into the story? And obviously no one wants to be in the story if they are just getting into it. And the story is potentially coming to an end. Now, is the story for ARM coming to an end? No. But is the stock price ahead of itself, right? Is the story of the stock ahead of the story of earnings right now? I would say so. I think that's pretty obvious. Maybe not for some other companies, but there are a few like Bloom that really doesn't have profits yet that, maybe Street's getting ahead of itself, giving it a 25% premium right here. But maybe that also doesn't matter. And yeah, memory maxing in the port might be the solution to everything. But nonetheless, if it's not the solution and you're getting in before things kind of take a pullback, that's where it becomes a much harder issue to imagine. And this is a good macro chart I want to show everybody. This is what has happened historically from 1949 to 2024. Maybe this year is going to be different because this year has already been different in so many different ways. But this is a midterm elections year seasonal pattern. I think part of the reason Tom Lee keeps calling for this 20% drawdown is look at this chart. We pump in April, and then starting May all the way until October, it's 5 months of pure downside every year in aggregate on a midterm year since 1949 to 2024. Now, that doesn't have to happen this year because last year was also a bit different because of the 30% tariff drawdown, all that stuff. But if it starts to look like this, imagine it started to look like this and people start bringing up, well, wait a second, historically, this is when you technically have to deal with some downside pain. Micron at 500 might not look that good like it looks today. Right. And so it's a big bet on how much do you believe in the earnings potential, the market's narrative, the market's willingness to pay these larger prices on stocks that they usually don't pay such a premium for. Because again, these are hardware companies. They don't have the best margins in the world, but they are beating, which is why the market's giving them some love. Enphase did beat, but unfortunately the market did not give them love. Beat on the top and the bottom. That stock is down 7%, 4% on EPS, beat on revenue. EPS is down and revenue is down year over year. How much do you bet on that narrative versus the narrative that these names might be ahead of themselves? That I think is the bigger question. Is Vlad on CNBC? Okay, let me pull it up. Let's see him talk right here. Yes, we're going to talk about the Mag 4 reporting in just a bit. Well, he's not on CNBC yet. He's probably going to be. Okay, so when he gets on, we will flip to him. But yeah, I mean, he said a lot on the call yesterday. I think the call was good, but I don't think the call necessarily cleared up all the concerns people have about the cyclical nature of the business. And, there's not much he can say right here. Someone asked him about Bitcoin. He was like, look, we can't control the price of Bitcoin. We can build crypto infrastructure. But at the end of the day, if Bitcoin continues to go down, which it has been, that is not going to be a good thing for Mr. Hood. DRAM ETF is basically all your memory stocks together. If anyone just wants to go long memory without having to pick a name, that's up 3.8% again. Seagate actually crushed it, which means Micron and SanDisk are probably next. It's just once again, are you buying SanDisk up 3,000% over the past year? Don't know how many people are going to do that, but that's one of the earnings that we're going to have coming up on Thursday. So this is what we've got in the context of some of these earnings. Couple clips I want to show everybody. Blackstone's president was on a show yesterday, and he's kind of John Gray. He's kind of making the same argument that I've been making over the past couple of days to try to make sense of why some of these stocks have fallen so much. There's a bottleneck, and if your stock is not supporting that bottleneck or intertwined with that bottleneck, it's a little tough for that name to go up.
Probably the biggest theme beyond the data centers for us today, which we can talk about, is what's happening in electricity. I mean, all of the things, the data centers, the robots, the autonomous vehicles, that reindustrialization, it all needs power. And it's everything from LNG to renewables, to pipelines, to electrical equipment, to utility services.
TBPN's daily newsletter has op-eds that are written.
Now, why is that important? Because a company like Bloom Energy, again, multiple, definitely ahead of itself, but it's in electricity, it's in fuel cell technology, it's in energy. And as a result of that, you got the leader of one of the biggest private credit companies in the world, Blackstone, saying, look, that's what we think is going to win. And that's what our customers and what we are allocating capital to. And because we think that those sectors are incredibly relevant and those sectors are not necessarily slowing down, the capital is going to continue to go to them. This is another chart that kind of highlights exactly why that's the case. Take a look at this. Spending on AI plans are expected to reach $5 trillion by the end of the decade. When Jensen said that the hyperscalers will be spending about $3 to $4 trillion, I think this was 2 earnings calls ago, by the end of the decade, even I was like, dude, they're going to spend that much money? Like, I get it, CapEx is important, but and I think now we're realizing, no, they are going to spend that much money, and it's not really going to be slowing down. This is all based on token generation demand, which, AWS CEO, Microsoft CEO, Azure, GCP, all of them are saying the exact same thing. At the end of the day, it is necessary to continue getting more and more people that are using these platforms, and there's more and more demand for these platforms. And in fact, you got the AWS CEO who said, wait a second, it's actually going to create a lot of jobs too. So this doom and gloom narrative of AI taking our jobs is not going to be the case over the next decade.
I will say, I get that question, and at least for us, we have take software development as an example. People say like, okay, it's great that AI and AI agents are improving what we can do inside of the software development world, but our software developer jobs going away. Can tell you, we are hiring just as many software developers as we ever had inside of Amazon. And in fact, I see the demand for that really accelerating. I think as we think about where AI really takes off and where agents can help free us from kind of the monotony of the repeatable parts of our task, it's really about leaning into those new things that we can do and thinking about what's possible. And I see many more opportunities for job growth in new areas and for new capabilities, frankly, than we have before. And I think, look, the jobs will be a little bit different, right? And
that's when this turns into a generational bull market, because one of the biggest bear cases right now is that the labor market's obviously going to take a hit. And if the labor market takes a hit, then that's not going to be a good thing for the overall economy. If Jensen's thesis is right, which again, Jensen's argument has been that we're going to have an exuberant amount of jobs, they're just going to be different jobs, then CapEx is crazy, margins are up, efficiency is up, inflation should be down because we have all this AI that's creating deflation in the economy. That's at least potentially the thesis of our new Fed chair. And then you have job growth. I mean, this is truly going to be a massive golden age for stock market investors, because that is going to lead to just, one could argue, unlimited amounts of growth and high quality, high margin growth, which is why everyone's so optimistic about AI and why we might very well be in the early innings. But it also means if you're a company that's not putting up growth or not in that sector that's meaningfully benefiting from that, which on a day like today, Hood and SoFi are in those sectors, your stock's just not going to get that love. And as a result of that, we're seeing the transition happen in a variety of these different companies today that are benefiting from that. SoFi down 9.3%, Robinhood down 12.8%. SoFi looks like it could potentially go to 15 today. Robinhood looks like it's very likely going below 70 in about 7 minutes when the market opens. We will see how the street thinks about it. Big tech. Okay, so put in the chat which of the big tech companies you think is going to outperform today. Crude oil right now at 104.37, so crude getting even a little bit more of a pump, up 4%. You got Meta, Google, Microsoft, Amazon. I'm putting my bet on Meta. I think it's going to be Meta that has a massive run today. Here's a post that I thought was really a good argument around it. Meta is trading at its lowest ever forward PE of 20, while revenue growth is going to be 35%. Ad revenues are expected to double by 2030 to $500 billion. At a 40% operating margin and 30x multiple, Meta would be a $6 trillion company, which is 250% upside from now. So let's assume you don't give it $6 trillion. It's at 1.7. Do we think Meta deserves to be at least a $2 trillion company? Yeah, I would think so. It is trading at the lowest price to earnings of any of the four companies that are reporting today. It's up 1% this year. It has not made a move, and it is broke out to 750 3 times over the past year, and it's failed. I think this might be the day where they really break out. Like, I'm trying to think of the bear case, and for Meta in particular, like I listened to the call last night. I listened to the Q4 2025 call again when it spiked up to 740, and I was like, why did the street give it that premium that day? And it was because Zuck wasn't even that good on the call. Zuck was actually kind of throwing shade at a lot of the analysts. Zuck was like, look, I don't know how to answer your question. My answers might not be something you like to hear. I don't really know exactly what to say here. Like, Zuck was kind of just being nonchalant on the call, but the stock still went up like crazy because they accelerated revenues at 33%. I think this quarter, as long as they don't massively increase CapEx, that stock's going to go up, in my opinion, if they massively increase the revenue growth, and they obviously beat on the EPS, which, they have a lot of different cost-cutting measures to help them get there. Now, if the CapEx goes up and the revenue guide doesn't go up and the revenue doesn't go up for Q1, that stock's going down. Same thing for Amazon, same thing for Google, same thing for Microsoft. But I think given Meta's outsourcing all these deals to Nebius, given Google's investing in all these different countries with tens of billions of dollars, like at the end of the day, these are the smartest people on the planet running these tech companies. I would imagine they have finally figured out how to get the ROI on this CapEx. And if they can just include that in their guide, or better yet, show it in their results, which quite frankly, Meta is the only company that has really been able to meaningfully show an acceleration of their core business, which is advertising, at the levels that we would expect from a startup, 30, 40%. That's what we're seeing in Meta as a $2 trillion company. they've been able to show that. And I think the street's going to finally give them the premium they deserve today. So I think Meta's my bet to absolutely crush it today. Amazon, I think the move has kind of already been priced in unless AWS accelerates closer to 30%. AWS is 24%. Goldman says they're likely going to do 250 billion of CapEx. The street has them at 200 billion right now. So there will be, if Goldman is right about this projection, another 50 billion to increase of CapEx for Amazon, which means the AWS growth has to be there, because if it's like 25%, it's not going to be that exciting. Goldman says 27% is what we think they can get to. Hopefully closer to 30% would be very important. Google, again, cloud is already growing at 48%. Maybe that gets above 50%. It might be obvious that Google also grows CapEx to keep up with the capacity, obviously with Gemini. And then Microsoft, I think the story is going to be Copilot. Azure can't miss. They missed last time. They fell 15%. They need to do whatever the hell they need to do to make sure that number comes in line with expectations. But I think that is my bet to really have a massive day. Obviously, I'm hoping all of them have a massive day, because if they all have a massive day, we can keep this rally hopefully going. Obviously, the rally has been massive. Semiconductors have gone crazy. S&P went from 630 to 711. So we need the big tech companies to justify what's happened. And it's also funny, the big tech companies, a lot of them aren't even at all-time highs, and the S&P is. So a lot of this run has been a lot more broader than just tech, which is actually a very good thing. But it's finally time for tech to join the party. And hopefully that's what happens going into this print. 30 and a wake up says Meta is Google in 2025. I mean, how many people agree with that? I think that's a good, I haven't even thought of it like that, but there is a world in which, when you look at the multiple compression, Meta is Google in 2025 if they accelerate the revenue growth, and then maybe that gets a re-rating. That, like, again, just looking at the Meta numbers, it does not make sense for it to be trading at this level given the growth they're putting up. Like, you have to think, what is the bear case? And if the bear case is, it's only advertising, it's like, I don't think that's a bear case anymore. Like, if you're growing your core business with AI and all this CapEx is leading to an accelerated level of time that is spent on Threads, which, by the way, just started getting monetized. Their street estimates, they're going to do 11 billion in revenue on Threads over the coming year. WhatsApp ads are officially getting rolled out across the entire world. And then Facebook and Instagram obviously continue to be strong. Forget glasses, forget Reality Labs. Like, if AI is accelerating that core business, I mean, what more do you need for the street to be excited for it? Same thing with Google last year when it came to search. So yeah, we're going to see. But these are going to be very, very important earnings. Google was 15x earnings. Yeah, Meta got to 18x earnings. So, when Google, Meta at the absolute, I think at 520, it actually got below 18x earnings. So Meta theoretically could have potentially was as low as Google in 2025 when it was at 520. But even at 670, it seems like there should be more upside here. So we're going to see what happens after the bell. We've got Amazon, Google, Microsoft. Qualcomm also is going to be there, which is important. This stock up another 1.2%. I think a lot of people have FOMO'd into Qualcomm simply because they think it's a semiconductor name that's going to run. Qualcomm's going to have to either put up or shut up today when it comes to the numbers. And hopefully those numbers are going to be able to get there. Oh, Bill Ackman's going to be on CNBC today. All right. He's going to be trying to pump this. Is anyone buying this Pershing Square thing? It's PSUS is the ticker. Again, I just can't imagine anyone in retail meaningfully taking a chance on this as an investment. As a trade, it's a different question. But I guess we'll see what Mr. Bill Ackman has to say. So Qualcomm's going to be important. We have Chipotle. And then we have a variety of other big tech names that we have as well. Reuters is reporting Iran moved to a collective wartime leadership center around the IRGC and Supreme National Security Council after the Ayatollah's death. This is actually consistent with all the other reporting that we've heard from the country, which is that there's infighting between both nations or both parts of the nation, which is obviously why it's been a lot harder to negotiate. Today, we'll see if the market cares about oil, negotiations, or big tech earnings. Here we go. Thank you, everybody, for being here. 9:30 a.m. The stock market on one of the craziest days ever is open. All right, wake your asses up. Let's get into it. S&P 710.50. That is red. Robinhood 72.70. That's a little green from the pre-market, but still red. SoFi 16.47. That's down 10.4%. SoFi opens down 10%. Robinhood opens down 11%. Robinhood a little bit of a green candle from that pre-market low. SoFi not getting any real green candle yet. That's actually continuing to go down. But both of those names down on the day. Starbucks up 4%. Palantir getting hit down 2.4%. Is all of software getting hit? All of software is getting hit again. Is there an Anthropic headline that can Cactus? Did we miss an Anthropic headline today? Did we miss it? Do we have to deal with this stupid game again of all of these software companies going down? Salesforce down 2%, Adobe down 3%, ServiceNow down 2%, Palantir down 2%. Is Microsoft going to be down? Microsoft is down 2% because they sell software. I mean, my goodness, is that oil or is that just the street upset again about software? Amcor, that's up a little bit. Robinhood now down 11%. S&P 710, 60. Bloom Energy's got to be mooning. Bloom Energy is mooning 25%. 25% on Mr. Bloom. Visa, which has been dead for a while, 336. There you go, up 8.5%, $640 billion market cap. That is green. CoreWeave is up 1.7%. You got Nebius, that is up about 1%. Oil's killing the market. Well, oil's not killing every part of the market. It's killing software. If we want to attribute that as the reason for why software is down, which I would find it hard to believe that it's oil. I don't see any Anthropic headline, but that's quite fascinating. As soon as the market, you know what it could be? Maybe the market's selling Palantir and ServiceNow and Adobe to buy ARM and Seagate and Bloom Energy. I mean, maybe that's what's happening. Seagate right there up 16% on the day. That continues to be green. I mean, every other day, it's the software names get a little bit of momentum and then they unilaterally fall together. And Microsoft shouldn't be down, but obviously Microsoft's in the IGV, so it gets slapped in there with them. Beyond Meat, that's down. Fastly, that's down. AppLovin, that's how you know it's a software sell-off. AppLovin also getting hit 3% right here. Intuit down 1.7%. Again, these software names. GM, that's down 2.9%. Corning, that's down 1.3%. You have Circle, that's down 2.6%. Where is Enphase? Enphase is down 8%. They actually had a decent earnings, so I'm not sure why Enphase is down as much as they are, but Enphase is down. Bloom Energy, $283. $283 as that continues to go green right here on the day for Bloom. You're seeing a lot more excitement from the street that's just willing to bet on these sort of broader arguments around AI infrastructure. SoFi lost 16. SoFi loses 16. Poet down 9%. That's not that surprising. I don't know why anyone's buying this thing. The fact that people bid it up yesterday, it's almost $9. Like, I don't get it, but there you go. 732. That one's down. Nebius, that's up about 1%. Visa up 10. Wow. When is the last time Visa was up 10% in a day? When is the last time Visa was up 10% in a day? I think it's been a minute. I think it has seriously been a minute for Visa to have done this. That is quite incredible right there. Visa, 10%. That's great. I do have Visa in my stock draft portfolio, so we'll look at the stock draft in a little bit, but definitely going to be helping out that portfolio today. Robinhood down 11.5. Robinhood, some of the bleeding, I don't want to speak too soon, but it might have stopped at 11.5%. I'm not seeing it hit below 72. Maybe that's going to happen pretty soon. We're 60 cents away. SoFi, unfortunately, the bleeding is not stopping here. Got a very small bounce off 1593. But this one's still kind of getting hit. SanDisk up 7%. Why? Because Seagate crushed it. So SanDisk is going up. Micron, is that going up? Micron is up 3.6%, still below the all-time highs. Teradyne should not be down 15% based on those numbers. Now it's down 18%. But they were up 90% going into the print. So this chart right here that you're looking at on the screen, this is the chart that I think everyone is afraid of getting into when it comes to when it comes to like a Seagate or a Micron or a SanDisk, right? Looking at this chart right here, Teradyne down 18% after being up 90% year to date. You know, if you bought a stock up 90% year to date, even if they demolish earnings, which is what Teradyne did, and it goes 18% down, you really can't blame the market. You have to blame yourself, no matter who you are. Buying something that's up that much and not expecting some downside momentum, even if they absolutely crush every metric, is silly, right? That's just what tends to happen. And so I think that the fear of that happening is what keeps a lot of people out of some of these names. But obviously the names that crush it, it's a gamble, but that gamble ends up working out. Intel up another 4%, 8780. 8780 as that one continues to keep moving. Reddit down another 2.6%. Reddit down another 2.6%. Looks like that's how the market is pricing these names today. MasterCard getting a move because of Visa. If Visa crushed it, MasterCard is likely going to crush it again. Visa accelerated their core metrics for the first time basically in 4 years. And as a result of that, it looks like the street is very excited for seeing that type of top line revenue growth. And you're seeing that happen right now. What happened with Hood? Again, I don't think it was something in particular that happened with Hood. It was the market just not feeling comfortable with the quality of the beat that they had, even if they did have a beat. Lemonade right there. Wow, Lemonade was up 9%. Once again, insurance, market doesn't care. NXPI up 22% because the market cares about semiconductors. NXPI 23% on the day. Lemonade was actually up on earnings. That one now collapses down 8%. Adobe going red, Salesforce red. I really wonder what the software sell-off is about again. It's not oil. Palantir, let's see if it can make a move back up to 140. Palantir down 3%, unfortunately. Marvell up 1.6. Intel trying to go for 90. Someone bought $13 million of 120 calls for Intel yesterday. If you believe in options flow as a pricing mechanism to determine derivative future price action, then I mean, maybe this thing's going to 120 if someone's willing to make a $13 million out of the money bet on Intel right here. 87.88, that's up 4% as that goes green on the day. Amazon 259, that's flat. You're not seeing any move on Amazon. SanDisk continues to go higher. That's an all-time high for SanDisk. That is an all-time high. Where is Micron? Are we at 530 yet? We are at 529. Looks like that one's trying to go back up. Tesla, unfortunately, just did not have the best earnings, but that one's at least been stuck at 370. Hasn't been going too much below that. Western Digital and Seagate, basically, when it comes to HDD, which is different from HBM and NAND and DRAM, it's a different type of memory. They're basically a duopoly, WDC, Western Digital, and Seagate. And so, there's a reason why SanDisk spun out of Western Digital, because they're two different companies when it comes to memory, and they kind of wanted different valuations. Both have done very well, but that's why Western Digital is getting the pump right here. Seagate absolutely demolished. So, the idea is Western Digital will do the same thing. And that's why that is green. CNN, Pakistan expects a modified proposal from Iran today or Friday at the latest. Okay, that's good. I don't know if that's going to help oil right now. Oil 104.50. Yep. Not really helping at the moment. But hopefully these headlines end up getting a little better. Rocket Lab and ASTS, are they crashing? Rocket Lab, oh my goodness. That's the lowest it's been in a week. ASTS, oh, she loses 70. That is ugly. That is ugly. Losing 70 right here. 69.17. That's down. Where's the 10-year? And you got J-Pow talking today, which is not going to help. 10-year, 4.39. I'm surprised the S&P is even holding up with oil up. I look at the S&P is like flat. It's down $1. It's nothing. 10 years at almost 4.5. Oil's at 104.50. Like, it's quite incredible to see the high beta names even get the benefit of being high beta. I don't care how good the earnings were when the macro gets that messy, which, I mean, I haven't won a World Cup, but I mean, this is a messy macro that we're seeing right now. Like, you would imagine these stocks don't get the benefit of being that high beta, but they are. Seagate, 19%. 19% as that continues to go green. Is VG getting a bit of a pump? VG up a little bit today, 4%. Hood lost 72. Are we at 71? We are at 71.75. 71.75. SoFi, 16.15. 16.15 as that one is still down. Western Digital, 12%. Continuing to go green. IGV still down 1.6. Software just decided to fall off a cliff today. Not fun, but that's ugly, dude. That is ugly on software for seemingly no reason. But that's ugly. Amcor losing 70. That is down as well. Nokia, which people are just jumping into, I guess, because they think it's the next one to run with NVIDIA. So that one's up another 5%. They did have good earnings, but it just seems like people are also bidding it up pretty heavily. And quite frankly, if they're following Jensen into Intel, maybe following Jensen into Nokia is the play. And maybe you can't blame people for getting excited about that. Amazon right there, 258. Visa still up 10%. SanDisk just got upgraded to 1400 the other day. It looks like, and 1100. It looks like it's going to get that 1100. So yeah, that one is that target looks like it's been acquired and it's going to be getting there. Vlad on CNBC. Okay, let's pull it up. Let's see what Mr. Vlad has to say. This is also, Robinhood's earnings, if they're any indication for the state of retail trading, that's not going to be good for Coinbase. So if you're heavy in Coinbase, to think about if the Robinhood numbers were not the best right now. Here is Vlad on CNBC.
Our revenue tends to track the assets under custody, but the component of that is within our control the most, the net deposits, has continued to be really, really strong. And we're also seeing continued market share strength across all of our active trader products, several records in there, including prediction markets. And if you look year over year, if you zoom out a little bit, revenues have been up 15%. Profits have been up as well. So, Robinhood as a business financially, we issue metrics every month. So there's very few areas where we could deviate significantly from metrics. I think what happened this quarter was because the mix shifted towards active traders, which get fantastic pricing on Robinhood, the take rates saw a little bit of compression. And again, a lot of this is just due to the macro environment, the war, all of the factors that are going on in the world. And despite that, net deposits continue to be incredibly strong. And I'd also add, we're making a lot of investments for the future. We were selected as the sole initial broker and trustee for the Trump accounts, which will put Robinhood in front of upwards of 60 million children who are eligible for these accounts. And, I think over time, that investment is going to be very, very powerful, not just for the business, but also for the next generation.
Okay, so it's 66 days, 15 hours, and 19 minutes before those accounts are open. You put away $100 million. Is that enough?
Robinhood just got a price downgrade from 85 or 75 to 65 at KBW. You're getting some downgrades coming in. So, we'll go back to Vlad in a little bit, but the argument that he's making around, the broader active trader environment not being that good, what he's trying to say right there is that, the business is prone to cyclicality, and the cycle hit us pretty hard in Q1. And you're seeing a downgrade come in right here. There was another downgrade this morning to 82. If you get some of the most bullish analysts start downgrading their price targets, obviously that's going to lead to some more buying or some selling pressure. And unfortunately, you're seeing it right there on Robinhood. Robinhood 73.25 got a little bit of a rebound up from 71, but that one's still down. SoFi, any rebound right there? SoFi still stuck at 16. Western Digital up 11. ASTS and Rocket Lab falling off a cliff. Visa and MasterCard holding on to their pump. Amazon flipping green. Where is Meta? Meta's at 664. That's down 1% of the day going into the print. Again, if you're asking why Palantir, ServiceNow, Salesforce are down, I don't see an Anthropic headline, but I guess the street woke up and hates software again for whatever reason. It's not even the entire market. It's really software and fintech and crypto that's getting the brunt of this pain. QXO down 1.3. Oracle down 2.5 because they are also included in software, even if they have a data center business. As that goes down, Broadcom, a little bit of green. Little bit of green. Cactuses, I see nothing. Yeah. And why is Zeta green and Palantir and Salesforce and Adobe are down? Zeta is at least getting very close to green. That's such a weird market reaction. And it's not Palantir specific or ServiceNow specific. It's definitely IGV, which is by Microsoft, is getting hit right here. So maybe the street is anticipating something around software, or maybe it's just jitters around JPOW. That once again, the street's a little nervous about. Visa, 10%. Duolingo is green. They didn't have earnings yet. Duolingo has earnings next week, I believe. Duolingo right there, 106. We'll see if they can combat some of the AI commoditized narratives. CoreWeave right here. That is at 108. Why are you excited for Meta earnings? I just think Meta is the cheapest out of all the names, and they're accelerating the growth the fastest. I don't know if that means the stock's going to pump. I mean, look, Meta's up a lot from 530. Amazon's up a lot from 195. Microsoft's up a lot from 350. Google's up a lot from 270. Maybe the pump has already happened, and maybe this earnings is going to be a sell the news on all of them. Maybe, and if that happens, it's going to suck for all of us. But I do think some of these names really can prove meaningful growth and are not going to deserve a forward PE of 20, especially when you have Bloom trading at freaking. Well, there's no E to the P, so it's like some of these, and again, that's not shade on the company. They are beating earnings by a massive amount. But if the street's willing to bet on that and not willing to bet on the companies that are using AI to actually grow, like the street's betting on the bottleneck and not betting on the actual beneficiaries of the tech that the bottleneck is being used to help create. And that to me is a little weird. I mean, it's not that weird because at the end of the day, capital is being allocated to the things that are putting up numbers. But the question then becomes, okay, the things that are actually going to use a Bloom Energy, which inevitably will be a Meta, Microsoft inside of those data centers, why are they not getting the higher premium? And I think that's what today's earnings are going to be about, if they can prove that they deserve that higher premium. SoFi continuing to get hit right here, 1590. Put in the chat if you bought the SoFi dip at all today. NVIDIA also down to 1060. That's red. The 10-year going up, not good to see at all. That 10-year now at 4.4. But I guess that's what we have to deal with here today before J-Powell speaks. Let's get back to Vlad, and then we'll get into some of these other headlines.
Government. So this is we're working very closely with the National Design Studio, and you're going to see some really, really good stuff. So Robinhood will be absolutely ready. And you mentioned the costs of it. This is structured as a cost plus arrangement. So we do anticipate that we will be generating some profits on this program.
Oh, he's gone. That said,
Numbers are not.
Oh, wow. I guess there was no interview to keep listening to because the audio cut out. Okay. That is typical of the price action today. Like isn't that quite poetic? His mic cuts out. Just all around crappy day for Robinhood here. 72.65, down 11.4%. Palantir down 3, trying to make a little bit of a rebound. Amcor down 2.5. MasterCard and Visa still holding up. Reddit down 2.3. So the other thing that's important today to think about when it comes to Mr. Jerome Powell is that if he doesn't give us an answer for if he's actually going to stay on the Fed, that could create some weakness as well in the markets. Because if he continues to stay with Kevin Warsh as the new Fed chair, there's going to be some infighting, right? So when they ask him today, hey, are you actually going to leave? Because now the DOJ is not investigating you, you're allowed to leave. And he says, well, I don't know. I got to see if I want to stay. That could obviously create a little bit more pain, and the market might not be the best about that. Okay, Vlad is back. They got him back. Let's bring him up right here.
The company be viewed as, but the market is currently viewing you as a company that is transaction-based, and your transaction-based revenue was indeed down 20% sequentially. A lot of options, 260 to 280 versus 283 we were looking for. Crypto, 134, we're looking for 157 million. How are you going to be able to change the perception that your company is deeply linked to crypto and options trading?
Well, perception can sometimes lag reality, but if you look at the overall financial profile of the business, we've got 11 business lines that generate 100 million or more in annual revenue, and then a couple that are getting very close. The Robinhood Gold Card has continued to do well with north of 800,000 cardholders, and Robinhood Banking, which is our premium digital banking offering, launched a few months ago to the public and is already at over 2 billion in net deposits, 125,000 accounts, and a 40% direct deposit attach rate. So what that tells us is this isn't just, an add-on to your brokerage account. People are trusting Robinhood as their primary banking product. So we're well on their way. And as these businesses continue to scale, I think you'll see the perception continue to shift. It has been, I think, already. And, a lot of people used to consider Robinhood to be heavily crypto dependent. You look at our crypto business, it's sub 20% of our revenue. So even as we continue to gain market share there, we're less reliant on any one of these business lines to continue to grow.
Vlad, I know some believe that the prediction markets represent a threat to your business. Obviously, you see it differently. I'm curious as to why or how you see that business growing, both at Robinhood and overall, as conceivably it starts to diversify a bit away from sports and perhaps even offers the opportunity for institutions and the like to hedge themselves on financial bets.
Yeah, so I think the interesting thing there is our partnership with SIG to launch Rothera. So our predictions market business, we're among the largest players in the space. It was a new record this quarter, and it's the fastest growing business in our history. So rather than seeing it as a threat, we've embraced it, and we see it as a great new opportunity for our act.
All right, so we'll go back to that. In the context of his answer here, unfortunately, I don't think his answer is going to get the street too excited. So, when he said perception is often not reality when it comes to the cyclicality of the business or the cyclical nature of the business, on this earnings, perception is reality. I mean, Robinhood grew transaction revenue 6% year over year. Like, perception was reality. The business was cyclical. Now, they were able to hedge that with the credit card, as you mentioned, and margin and all these other different products that they had, but they weren't able to hedge it to the level that would have created more than 15% growth, which is what the business grew at. So at the end of the day, Vlad can make the case that, hey, we have a diversified business, but the core part of the business, which is the majority of the revenues and profits, isn't growing because the market was crappy in Q1. Now, long-term, the innovation in the diversified set of products is going to lead to, I think, very strong shareholder returns as the business becomes this sort of financial super app. But in the short term, if the markets are down, if crypto's down, yeah, that's where they're going to get hit. And I think, that's explaining the price action right now on Robinhood. Service now down 2.5, Microsoft down 1%. Amazon getting a little bit of a bid here, 261. It was at 266 the other day. I don't see any major headline here, but Amazon slightly green. Canada has held their policy rate at 2.25%. Canada held their policy rate at 2.25%. So you got Canada not really making a change up or down. U.S. oil fund, that is also green. USO, that is up on the day. You got crude as well. Oil prices, wow, 105 on crude. 105 on crude. Where's AMD? We haven't looked at that today. AMD 323. AMD is actually holding up pretty nicely. Holding on to the 320s, not that bad. CoreWeave, I don't know why that's going up, and Iran is going down, but CoreWeave is, Iran's getting hit right here. Iran down 3, CoreWeave up 4. Nebi is kind of in the middle, basically flat on the day. NVIDIA trying to go back to going green. Palantir still getting hit, down 3.4. Micron, it was at 530, now it's at 521. I don't think it's good for crude to be pumping the way it's pumping, and I don't know for how long the market's going to ignore that it's pumping, because right now the market's basically ignoring it. I mean, S&P again, nothing. It's down 0.15. Kathy Wood did buy CoreWeave yesterday. She also bought Google. She bought $40 million worth of Google. So I don't know what that means for Google today, but 350 right there on the Googs. Trying to go a little bit green. Is 300 possible today for Amazon? Put it in the chat. I would be skeptical of 300. I think if we get a pump, it's more like 275, 280. And that pump is going to have to be solely based on AWS seriously reaccelerating, which again, it already reaccelerated from 22 to 24. Could they get that thing up to 28, 29%? I don't know if 25% is going to be enough. If they get anywhere above 30%, I think that stock's going to go nuclear. And if it does go above, if AWS accelerates above 30%, that means GCP is probably going above 50. Azure is definitely going above 40. And theoretically, Meta should crush it as well, because if there's that much AI demand, then that means they should be seeing the benefit in their products. So I would imagine if those cloud growth rates are up for Amazon, then they're up across the board, and we don't have to wait a couple of days to find out. We will see all the cloud growth rates today and see what those numbers look like. Samsung also has earnings tomorrow as well. That's fair. SoFi, are we still at 1580? We were at 1613, so it's kind of oscillating between 1580 and 1615 right here. At least it's not getting below 15, which is good. So we're not seeing the March 30 lows yet, around 14. A-Lab, is that up? A-Lab is green, plus 4%. The Qs just went green with oil being up 5% on the day. That's a weird thing, folks. It's just kind of weird. But either this is setting up for a major rug pull, or oil's pumping artificially, and they shouldn't really be pumping right now, so the market's ignoring it. I mean, again, I don't think this headline of the headline is good. The headline is more negotiations potentially. I mean, yeah, the blockade increasing is not the best, but if the blockade is going to lead to a negotiation, then I guess the market's just ignoring the higher oil prices right here. Where is Broadcom? Broadcom still up 401 on the day. Seagate 16%. Is anyone buying Seagate, Micron, or what's the other one? SanDisk today? Did anyone see those Seagate earnings and said, you know what, screw it, enough is enough, I need to be in memory? Because, I mean, if that's the general direction right here, then Micron and SanDisk, I mean, Micron just got initiated at D.A. Davidson for a $1,000 price target. So even the street is like, you know what? We're late to the story, but we think the story's not slowing down. I see a few people saying yes, more people saying they bought SoFi today. Yes. I'm in them already. I can't do it. A lot of people here saying I just can't take a chance right here on it. I agree. Micron's still cheap. It's just that chart. What do people think about it? Now, granted, if they put up a Seagate type of quarter, same thing with SanDisk tomorrow night. I mean, my goodness, I feel. And that's the other thing. The money gets sucked out of the losers, which is software this year and fintech, and it goes into the winners. And if Seagate and Micron crush it, I mean, I think it's going to be even more pain for a Rocket Lab that right now just doesn't have a catalyst besides the SpaceX IPO, because the money's got to come from somewhere, right? The money has got to come from somewhere here. 10-year still 4.4, not good. AMD 323, Amazon 262. Such a weird day. 10-year pumping, oil pumping. Bloom is down pretty heavily from 290 to 273. Still up 20% on the day, but that 290 at the top is potentially a little bit of resistance right there. Marvell 155, that's down from 175, even it's up from 90. And then Starbucks crushed it. Starbucks actually had their first growth quarter in acceleration for the first time in literally 7 years. So, in 7 quarters. So Q2 2024, they grew negative 3%. And since then, it's been negative until Q2 2026 at positive 7%. So it's been about 2.5 years since they finally flipped comparable store sales in North America to green. That is why you're seeing the reaction on the stock, because it has just been abysmal for people or for shareholders at Starbucks, because same-store sales just were bad, which is the best metric you use to justify these restaurant locations. And Starbucks accelerated. Once again, if you're accelerating growth, you're catching a bid, especially if you're in a downturn. If you're not, like Apple, I think Apple could catch a bid because I think iPhone sales will accelerate again. And if that happens, like it did last quarter, maybe the street overlooks the multiple and gives it a bid. Tesla right there, 374. That is still down. What do you think about Microsoft? I think Microsoft's cheap, trading at 22 times earnings. Obviously, I don't think it should be here. I don't know if they're going to have a catalyst today that, on these earnings days, if you're buying a stock before earnings, there's got to be a like a real catalyst that just makes it's either an earnings beat, it's a guidance raise, or it's some type of announcement that makes the street realize we cannot wait even for 2 seconds. We have to buy the stock. I don't know if Microsoft has that announcement today in them. I don't know if Google does either. I think Meta does with the reacceleration of revenue, and I think Amazon does with the reacceleration of AWS. Now, granted, Microsoft and Google can still go up because they just have a good quarter, but like that type of explosive, 10, 15% move we're seeing in some of these other names. First of all, the companies are already worth so much, it's hard to move up, a couple $100 billion. But they're going to need those arguments to get the street more excited. Wow, ServiceNow 87. That one's still getting hit. Still getting hit, unfortunately. ServiceNow is down. SanDisk is up 1,088. Let's go back to Vlad and finish up with him here.
Traders. And what happens with the Rothera integration is now we're vertically integrating. So we're no longer going to have to rely on third parties. We thought this was too big of an opportunity for us to not have complete vertical control. And that will give us more control over not just the user experience, but also the pricing that we can offer customers.
Well, I want to thank you, Vlad Tenev, who's the chairman, president, CEO, and co-founder. Thank you for coming on Squawk on the Street.
Yeah, always a pleasure.
Okay, so Vlad kind of continuing to make the argument about prediction markets and how that could also continue to be a tailwind. 1,088 right there on SanDisk. NVIDIA below 210, Robinhood below 72. Also, JPow's never going to be a fun thing to hold stocks through. So, I mean, a lot of this volatility could also just be the street dumping some of their stocks before Powell speaks. So I wouldn't get too shaken up out of your positions right now. I mean, at the end of the day, it's a FOMC day. It just happens to be on a day where oil is spiking. Nebius turns red. Iran going down 4%. CoreWeave still up 4.5%. So that's complete divergence between those two. But obviously, J Powell could say things that could make this work. Palantir getting hit, 135.79. That's down. Meta 668, at least holding on to the 660s. Micron 524. Bill Ackman on CNBC. Okay, let's see him convince us to buy this thing. I still don't get what the logic would be behind it, but here we go. Pershing Square going public today.
Why are you doing this now, taking these companies public?
Well, actually, I'm an American investor, run an American company, and I invest in American companies. But we don't have a way for U.S. investors to invest with us. We didn't until today. And by bringing Pershing Square USA public, we create a way for anyone who can buy one share to invest with our firm. And it's sort of the democratization of capitalism, something I feel very good about. Hedge funds are sort of known for managing money for rich people. And now we have the opportunity for someone with $50 can be a long-term shareholder.
I mean, that was a big deal for you, getting retail investors involved in this. You did a YouTube presentation. You did, I think, a podcast with Vlad Tenev of Robinhood and got some allotment there. Why retail investors, and what's your sense of what demand is going to be like there?
Well, this is a very unusual. While we took the body of a closed-end fund, but we look nothing like other closed-end funds in terms of scale, in terms of governance, in terms of strategy, in terms of performance. The average equity closed-end fund over the last 8 years has generated a 7% return. We've generated a 25% return over the same period per annum. Right, so it's a very different kind of animal. Why now? Or your question?
Yeah, I mean, just why demand for retail? Why that?
Actually, that was the point I was trying to make, which is typical closed-end fund, 99% of the buyers are retail. It's really like a financial product that's sold to financial advisors and they put it in a client's portfolio. We did this like a traditional IPO. 80+% of the investors are actually institutions. Most of them family offices, pension funds, insurance companies, very sophisticated investors. None of them had ever before invested in a closed-end fund. So we took this structure, which is an amazing structure. I'd never looked at closed-end funds. What's unique about closed-end funds, you can buy minority stakes in companies. You can buy controlling stakes in companies. You can use derivatives to hedge risk. And there's only one layer of tax. Typical corporation, there's corporate tax, and then there's tax when you pay a dividend. So it's the most tax-efficient corporation. It's the most flexible corporation. But no one's ever used it for the purpose we're using it for.
Yeah, why do they tend to trade at a discount, closed-end funds?
Because they're passive collections of securities with fees. That should trade at a discount. But don't blame the closed-end fund industry don't blame the structure for the performance. And the analogy I would make, go back to the 1970s. A whole bunch of real estate investment trusts were launched. They all traded at discounts. Why? Because the sponsorship was weak, because the performance was weak, because the asset quality was poor. And then in the early 90s, I'm sure Carl will remember, Sam Zell took public one of the first multi-billion-dollar professionally managed real estate companies, and he chose to do it in a REIT. And people were like, Sam, why would I invest in a REIT? REITs trade at discounts. He's like, no, not this one. And REITs traded at big premiums, particularly in the 90s, because lower cost capital in public markets, liquidity. And what did Sam have? He had best-in-class governance, he had best-in-class performance, he had best-in-class asset quality. That's what we're doing. We're kind of the rebirth of the closed-end investment company universe.
How do you feel about the amount you raised?
Does anyone understand what he just said? I don't. At the end of the day, if you buy this thing, you're buying Amazon, Google, Chipotle, Hilton Hotels, and Meta, Hertz, and Uber in a fund. If you're trying to communicate to retail investors and no one really understands why the hell they're buying this thing, I don't know. I don't get it.
I think $5 billion was about half of as much as you were aiming for, as much as $10 billion.
Aiming is not the right word. Okay. So we were giving, actually, it's a very unusual offering. All we talked about is Pershing Square USA. But as part of this, 2 years ago, we came to market. What we heard from people is they liked the structure, they liked the governance, they liked the track record, they liked the sponsor. But they're like, why should I invest on the first day? It's just going to be a pile of cash. It's hard to get a pile of cash to trade up on the first day. Retail loved it. Financial advisors loved it. But the institutions you need to do a large-scale offering are used to an IPO that pops. It goes up 10, 15, 20% the first day. So that's when I scrapped it. I said, I'm going to come back with something better.
That was 24.
I was 24, and it's actually my wife's idea. I went home, I complained to her, it's going to be a $2 billion offering. I thought it could be 10. She said, well, is there something else you could give them? And I said, sweetheart, this is a really good idea. And so what we're doing is we're giving a piece of the GP, the management company, the entity that receives fees from the funds.
Okay, because I actually watched the podcast on him explaining this, I do understand this part. When he says, oh, I've got something more exciting to give them, and he says a piece of the GP, he's talking about the intellectual property of himself. So what is Bill Ackman's business? He manages money and he collects 2 and 20, which is typical fees that money managers take. The GP, the general partner that controls all of the assets under custody or under management for Pershing Square Capital, is him. He's getting the management fee. So when he's saying, I'm giving you a piece of the management fee, which is this whole, you get 5 shares for every 1 share that you buy, or sorry, 1 share for every 1 free share for every 5 shares that you buy. His intellectual property is the GP. There's no tech. There's no sophisticated moat to what you're buying as the GP or getting a piece of the GP. You're buying Bill Ackman's acumen to be able to make smart investment decisions, because his GP is getting his management fee because of his ability to pick the right stocks to generate those performance and management fees on top of the capital that he allocates. So that's what he means by the GP. You're getting this extra piece, which is really just management fees, which isn't that special to me because that's just him picking stocks that you could also pick as well, because he publicly discloses all the stocks that he picks.
And it's like a gift with purchase. And so for every 5 shares you buy PSUS in the IPO, you get 1 share of what we call Pershing Square Inc. So the IPO pop comes from the receipt of another security. It's almost like buying stock in an IPO, getting an immediate spin-off of another company. Once we had that, we were able to create an offering that was oversubscribed, which has never happened. There's no such thing as an oversubscribed closed-end fund offering, because they take every dollar of demand. In this case, we cut back the institutions very significantly in the offering. We let the retail investors get every dollar of, it's usually the retail gets cut massively back and the institutions are favored. We did the opposite. Now we picked the best.
I don't believe that shit for 1 second. I think the institutions were like, Bill, we already pay you a management fee. We're not going to oversubscribe to get a piece of the management fee that we pay you in the GP. So when he's saying, oh, we had to turn away the institutions to give retail, get the hell out of here, bro. No. PSUS is pretty sus. I do not believe that for 1 second that that's how that actually played out.
Best-in-class institutions. But just to give you context, $5 billion offering is the 6th largest IPO in the last decade. It's like the 20th largest IPO in American history.
So you're not disappointed.
And by the way, I asked the bankers, I said, when was the last time you worked on have you ever worked on a $5 billion plus offering? and only a couple of people out of a group of 60 have raised their hand. So
there's a lot of bigger ones coming though very soon, as you well know.
I mean, SpaceX could be a lot bigger, obviously.
Yeah.
But in this universe, I mean, permanent capital, this has never happened before. And, so I think it's a great thing for, obviously, we have some of the wealthiest investors in the world. We have a $200 billion family office that invested in this transaction. We have a pension fund that invested $500 million in this transaction. This was the 2.8 billion cornerstone round is the largest amount of committed capital ever raised from an IPO. So we broke a lot of records here. And ultimately, at the end of the day, it's going to be about the performance long term. But, this is a pretty
Well, how do you
story.
think it's going to trade then? I mean, to that point.
The lawyers told me not to advise how it's going to trade. So,
right. But that's got to be a key consideration for everybody who was putting this together.
Let me tell you what we did.
Given the discount we were just discussing that these things typically trade at.
Yes. But remember, we're not typical, right? We have if you take the track record of Pershing Square at the fee structure of this vehicle, it's by far the best performance of any closed-end fund extant. Okay, so our 22-year record is a 19% compound return. The next best performing closed-end fund is 14%. And the returns drop off very quickly. If you look at the last 8 years, that's the period since we've had permanent capital. For us, it's been a 24.9% return. The average closed-end fund, a little over 7% over the period. The next best, 14.7%. You understand the power of compounding. The difference of that extra 10 percentage points a year is kind of huge. So governance, let's just talk about it. Closed-end funds have notoriously bad governance. If you're a BlackRock closed-end fund, they have the same 5 or 6 directors on 80 of their funds. We have a best-in-class board. We have the former head of the Division of Investment Management in the SEC. We have the former CIO of Fidelity Investments. We have the former head of risk management in Morgan Stanley. We have a former private equity executive from Providence Equity. We have a former hedge fund and private equity executives, like real board. And the other thing we're going to do that's different is we're going to treat the fact that the corporate structure is a closed-end fund. It's a corporation, and we're going to run it like a normal company. We're going to have quarterly earnings calls. We're going to have analyst coverage, right? We're going to
Investor days?
We're going to have investor days. We're going to have an annual meeting, Berkshire Hathaway style, where people come and they ask questions. This is going to be something that people want to own.
But
right?
Bill, explain to our viewers and how it differs from what was originally, I think it was Amsterdam-based fund back in 2014. Now it's a London-listed fund that does trade at a significant discount to its assets under management.
Sure. So supposed to not talk about it much. And here's the reason why. The SEC does not like publicly traded hedge funds that Americans can buy. Because under the 40 Act, you have to be an accredited investor to invest in a hedge fund. So we have to keep that vehicle offshore. What that means is I'm not allowed to talk about it on TV. I can't go on Jim Cramer's show and talk about how we're doing. I can't put the ticker symbol in an article. I can't market to U.S. investors. The beauty of Pershing Square USA, it's an SEC registered entity. Anyone in the world can own it. By the way, the other thing I think is unique about this, typical closed-end funds, 100% of the buyers, 95% are U.S. Our investor base here is global. We have investors from Mexico. We have investors from the Middle East, investors from Israel, Europe, Asia. It's a company with an incredibly tax-efficient structure, but don't throw me in the basket of grandma's closed-end funds. We have nothing to do with those entities. We're just passive. Look at our strategy, right? We're a very active investor. We made an offer to buy a major company a few weeks ago. All of that activity is going to happen through this vehicle on a pro rata basis with the other stuff that we do. So it allows an investor with $50, literally $50, to invest alongside investors that have $200 billion. And I think that's really a unique opportunity.
I was going to ask you whether an incrementally more retail investor base alters the way you think about risk.
Not at all. Not at all. And by the way, we should spend a little time talking about the management company. So everyone knows Blackstone and KKR and Apollo and Carlyle, these alternative asset management firms. Well, the gift with Purchase is a business called Pershing Square Inc. And that business has a lot of unique attributes. So number one, Blackstone's got $1 trillion of assets. We have, in terms of fee-paying assets, we're going to have 25, 26 billion coming out of the gate. So we're tiny, but we're the only firm that grows organically. 98% of our assets are in these permanent capital vehicles, which means our AUM, our assets grow with compounding. So the business model is like collecting a royalty on the compounding of 3 vehicles.
If he picks the right stocks, when he's talking about organic growth, it's not like a software company that continues to have stronger net dollar retention. They have to keep picking the right stocks, which means you are essentially, again, betting on Bill Ackman to be able to do this, for the AUM to grow, for the fees to grow, because higher AUM, higher fees, for you to get a part of those fees in the GP. Like, this is just a bet on Bill Ackman at the end of the day. And if he's already publicly disclosing what he's investing in, the question is, why don't you just invest in that yourself?
invested in a high return strategy. So if you last 22 years, it's been at the lower fee structure of this entity, about a 46x in terms of, you put $1 in, you'd have $46 22 years later. With 26 billion of fee-paying assets, if all we do is compound at historic rates, in 20 or so years, we'll have $1 trillion of AUM. The private equity model is you raise capital, you invest it, you sell the assets, and you send it back, and you got to raise a new fund. In our model, if we don't raise another $1, we compound at historic rates, the business will
historic rates being the 19% that you've
That's
had
right.
since you. So with the 2% management fee, then obviously the management company's
19% is net of a 2% management fee.
Right.
Right. And by the way, in terms of the business around, I feel good about the fact that our U.S. investors are getting a really good deal. Right. We've actually generated a 21% gross return for 22 years, and we take 2%. Right. It's 21% is about 11% above per annum the S&P over the same period. The S&P is up 9x over the last 22 years, and this vehicle at its fee structure would have been up 46x. Right. Yeah. So this is a massive outperformance, and we take a 2% fee. The typical hedge fund is 2 and 20, and sometimes more.
Aware.
Yeah,
right. So this is a bargain basement fee structure.
You've done a great job selling it right here.
But if you're a retail investor at home,
sure.
Why buy this and not just buy the sort of concentrated positions that you're in, these stocks,
Sure.
where they can just do that and not pay the management fee?
Yeah. So we did an analysis a couple of years ago. We looked at every investment we had made. We compared our average cost to build the position with what you could buy it for on the day that we disclosed it. And you had to pay about a 26% premium. Okay, so that's one. Two, we don't just buy stocks, right? We get pretty deeply involved in companies. We announce transactions, right? The other thing we do is we hedge risk. So very important. So 80% of our
Okay, we're not going to listen to the last part because we already listened to it a couple weeks ago. What he means by hedging risk, he's going to talk about during COVID. We did this, we did that. We were able to predict the crash, yada, yada. So essentially his argument here is the reason you invest with me, Bill Ackman, and have a piece of my fund, SoFi right there, 1590, is because I'm going to do 21% returns per annum, which is double the S&P. You have to believe Bill Ackman will continue to do that. C, if you, invest with us, you get a better cost basis on stocks over buying them yourself on the day we disclose it, which to me is absolutely hilarious because, oh my goodness, Bill Ackman disclosed that he bought Uber, Meta, Amazon, Google. Wow, that's surprising. It's not like, retail, of course, retail's loaded up on those stocks. Those are very basic investments. Those are not some unbelievably, different investment. Like Chipotle, you got to give the guy credit, right? And a lot of people didn't bet on Chipotle, but the majority of the fund is big tech. It's a smaller version of the NASDAQ as Intel hits 90. So realistically, the only value I'm seeing from getting into this Bill Ackman Pershing Square conglomerate here is if they actually take a Berkshire approach and they take companies private, like Berkshire did with Geico and Fruit of the Loom and all that stuff, incubate those businesses and then compound them underneath the vehicle of a Berkshire Hathaway, which maybe that's what Ackman's long-term vision is. And maybe he's going to be very effective at doing that. But if the whole pitch is you guys get a piece of the management fee and the management fee is dictated by my ability to find the right stocks, and by the way, the stocks that I'm finding are the biggest companies in the world, like Google, which, congrats to Bill Ackman buying Google at $90, $100. There were a lot of people that did that. This was not Palantir at 6, quite frankly. That did a 20x, right? Google at 90 is amazing, but it's not like other people didn't, Palantir at 6, SoFi at 4, Rocket Lab at 4, Hood at 7. These are names, Air Test Systems. Roy talked about this name when it was $10. These are real names that do crazy numbers. If you're buying big tech names, you're telling me that retail can't invest in those big tech names? You're telling me no one bought the dip on Amazon and Google in 2022 when they were at $90? So, and the one bet that he's made that is not consensus is Hertz, which hasn't done anything, right? And look, maybe Hertz will do something over time, but if the entire logic is buy it based on the fees and the fees are based on my ability to pick the right stocks, then you literally have to trust Bill Ackman will keep picking the right stocks. And the question is, can you pick the same stocks that he can pick? And I think people can. Intel absolutely making a move right here. 90.30. Again, those call option volumes are super, super heavy on Intel. We talked about that this morning. At this point, Intel to 100. Looks like it's destiny right here. $453 billion market cap. as that one continues to go green. The other thing he said is, oh, we have the ability to work with those companies and change them. I'm sorry, but Ackman's not talking to Zucks, Sundar, or Jassy on changing anything. Like that is so disingenuous for him to say that. If you find some small random $100 million market cap, yeah, maybe you can change their management team because you can strong arm them and basically blackmail the executives and control the business and be a real activist. You're not saying anything to Zucks. He's not going to listen to Bill Ackman. So if one of the kicking points is like, hey, we get to work with these companies, you're not working with the biggest companies in the world. They're not listening to you. Bill Ackman has 2 million shares of Meta. Okay, so who cares? So once again, I don't get it. I really don't. I wonder if retail bids it up. I really wonder if retail bids up an ETF of Uber, Google, Meta, and Amazon and Hertz. And if they do, it's quite telling to me about the state of the market environment we're in right now, that a name like Bill Ackman can get that much excitement over nonsense, over absolute nonsense that he's pitching. Bloom Energy right there, 280. That one's still up 24% on the day. Poet loses 7. What do you mean by blackmail? So essentially, if there's a $200, $300 million company and Ackman takes a 10, 20% stake, I mean, you could call it threaten, you could call it blackmail, but essentially, if the CEO doesn't capitulate to what the activist wants, you're out. He can't do that. He can never have enough money to take a stake in Amazon or Google or Meta that allows him to have real authority when it comes to activist investing. So if the whole argument for retail is, well, invest with us because me, Bill Ackman, I've got the pull and the ability to influence these companies. It's like, not on the big ones. On the big ones, it's based on earnings. It's not based on you. And if the majority of your fund is in the big ones, again, what is the logic? What is the moat of investing with Ackman? I think that's the question. By the way, we saw this when Ackman was talking. The Senate is voting on Fed Chair nominee Kevin Warsh, and it looks like he will be approved. It is now advancing to a full Senate vote. He was approved by the Senate Banking Committee. As long as we get 2/3 of the Senate voting for him. Or does he need 2/3? Or does he only need, I think he might only need 51 votes. Yeah, I think it's only 51. Then he will be approved. Robinhood losing, unfortunately. 71 right there, as that's down below 70. The word you want is pressure, not blackmail. I mean, tomato, tomato, right? If Bill Ackman says, hey, do this or you're fired. It's one or the other at that. And, if the company's that small, like, you either do it or you're out. So, yeah, I guess it's definitely a lot of pressure. But they're not making those investments because then no one would invest with him. Like, no retail is going to invest on Ackman trying to activist take over $300-400 million companies. Like, that's just not an attractive vehicle because then you have to assume Ackman's going to actually figure it out. And I don't know if that's going to be easy for him to do. Wow, Lumentum up 10. Lumentum was down 10 yesterday. And now it's up 10. That's incredible. Just massive swings right here. TSM 394. That's below 400. But it is still down on the day. RVI, I still don't know why that pumped earlier this week, up another 4%. I guess OpenAI's private valuation is going higher, and RVI is tracking to it because I'm not sure why they got that big of a move that they are getting. SoFi still losing 16. Why wouldn't Ackman influence Meta? Ackman owns $2 billion worth of Meta. Meta is a $2 trillion company. He's not going to be able to influence them. He's not going to be able to get in meetings with Zucks and say, hey, look, I think you need to get rid of Reality Labs. Now, if he owned 150 billion of Meta, that's a different question, right? Maybe if Zucks likes him as a person, he'll pick up the call. But the point is, he's not going to be pressured to do anything because of Ackman. And so for Ackman to sell that as like a sticking point for why you should invest with him, it's disingenuous. It's just wrong. He doesn't have that type of influence. He's not that guy. He's not that guy when it comes to these companies. The Herbalifes of the world, sure, he's that guy. But not the Googles. As Goog tries to go for another all-time high, 352.70. 352.70. 353, I think, is that all-time high. 353.18 is trying to get their SPY. 711.42. Amazon, is that all-time highs? Are we? No, we're not. Amazon, no, we are. 264.50. Oh, we hit 266 in the aftermarkets. That's why that doesn't count as all-time highs. Wow. Okay, so Amazon getting the breakout. Amazon actually getting a breakout here with Meta. Well, no, not Meta. With Google. Meta, hopefully later. Google right here. Again, Ackman owns Google, Amazon, and Meta. I think those are great bets. I just don't know why I would pay him an expense ratio to manage 3 investments that I can buy myself. That's it. And I don't have anything against Ackman. I think he's a great guy. I would love to interview him one day. I'm just trying to call a spade a spade. Like, really, what is the value of what he's offering here? And also, the way he's telling the story is kind of weird. I went home. I was so mad at my wife. I thought I could get 10 billion. I only got 2 billion. Then my wife said, aha, I have an idea, honey. This is what you can do. It's like, it sounds so slimy. Like he's just trying to find a way to up the ante to figure out how he can make more money. And now they're putting in all these hoops of, like, quite frankly, bullshit to compel people to be excited to buy what you're seeing on the screen, which is Google, Hilton, Meta, Amazon, Google, Uber, and Brookfield. And then a little bit of Hertz. Like, if the IPO failed 2 years ago because it wasn't compelling, and you came back and said, I'll give them a piece of my management fee, which is my ability to find the tech companies that everyone's investing in, that's not a compelling reason, I think, to be excited. S&P almost going green. Almost going green. 711.38. Almost 712. Poet absolutely getting destroyed. This one deserves to get destroyed. This is junk. It was junk a couple days ago. I don't understand why retail bid it up yesterday. Let's see if retail comes in and buys the dip, but it is important for junk to continue to be junk and not catch a bid. You just can't have really quality, good companies losing money because people are YOLOing into Bird and Poet. Where's Bird? Bird is also now down from 24. Yeah, poetic justice. I mean, honestly, the CFO just had to keep his mouth shut. That's all he had to do for Poet to probably still be at least $10, $12, even if it wasn't at 17. And if a management team can't keep their mouth shut on a massive contract, like I just don't know how you can trust anything about it. Oracle, that's down 1.3. Spotify getting a little bit of a rebound, up a little bit. Intel, 90.6. I mean, folks, it just looks like this one's not stopping. Now, maybe there's there's no headline on Intel today, so maybe there's a little bit of euphoria here, but I'm not sure why this one is getting this much of a bid. Maybe it's the option flow, but I don't know. Who's touching Intel here? Who's touching Micron? Who's touching Bloom? That is once again the question. As much as people want to be upset that those names are going up and their stock is not going up, are you willing to make the transition? Are you willing to get rid of all your SoFi to buy Intel here? It's a tough spot, honestly. And it's tough for not just retail, but institutional. It's tough to be like, well, I'm in a loser, but I'm not going to sell it for a winner because that winner is up 3x this year, even though that might be the right decision. But it's just hard. It's hard to do that. BMNR continues to get hit. BTC continues to get hit. Has anything changed on SoFi since it went in the 20s? No, I think the business is even better. It's a tough reality living with a stock that is not cooperating with the business metrics going up and to the right. And the stock just staying flat or going down. Celestica got hit pretty hard yesterday. Celestica, a little rebound, 3.4%, but obviously down pretty heavy from 452 to 370 here. Uber adds hotels bookings to its app through new Expedia partnership. Bookings was actually down yesterday, which hurt Expedia because their gross bookings, no pun intended, actually missed estimates for Q1. They did beat on EPS and revenue. By the way, SpaceX IPO, Elon Musk can only be removed from SpaceX board or officer roles by a vote of the share class he controls. Only Elon Musk can fire Elon Musk from SpaceX. Okay. I actually don't think that's that surprising. I mean, Elon has spent the past 2 decades building that company. If I was him, I also would not allow anyone to be able to fire me. But yeah, he's getting kind of Zuckerberg control of Meta. It's a good deal for him. Now, if he screws over shareholders, not going to be the best, but you wouldn't buy SpaceX if you didn't believe that Elon would be able to help shareholders. So There you go. SoFi 1597. That's down. That is also down. There was no TT this week. That's correct. There was no TT. There was no TT. We'll do it next week after we get through earnings. Tesla still down 372. We just got crude oil inventories negative 6.234. Oh, wow. That's a pretty heavy miss. That's a pretty heavy miss if I'm not wrong. Expectation was negative 0.19. We got negative. Oh, yeah, that's ugly. We got negative 6.23 million. Expectation was negative 200,000. That's obviously not the best, and that's probably part of the reason why, what's his name? Crude oil is pumping right here. That's a little ugly. Now, we kind of knew the number would be bad, but that's a bit worse than what I think the street wanted. Axon's getting hit. That's correct. There's that miss right there. Yeah, all of them missed. Distillate inventories missed. Crude inventories missed. Gasoline inventories missed. They all missed by almost 3-4 million, which again, I think was kind of expected, but then again, it wasn't expected if the forecast was that much of a miss. At the same time, the market's up. Intel's up. Bloom is up. So it's almost like, I don't know, does the market not care about oil being? I would expect the S&P to be a lot more red today, and it's not, as Amazon hits all-time highs again, 265. I mean, it's quite surprising, but if anything, I think there's two scenarios. It's either a rug pull coming because eventually this oil story is going to catch up to the market, or the market once again is believing that Trump will figure it out, negotiate, oil will come down, and they're not going to get caught up in worrying about it anymore. Look at Google, all-time highs, 354.30. Google and Amazon, both all-time highs on a 6% move for oil today. I mean, not bad. Like, not bad at all right here. Google 354. Amazon is up. It's just waiting for Thursday. Maybe that's also the case. SPY 711, Google 354, then Meta 671. Yes, Nokia is trying to get to that $12. I'll check resistance on that, but it's been trying to break through. Somewhat of a recovery in this market. I know Hood and SoFi are still getting hit, but some of the tech names like an AMD, they're trying to make their way back up. 12 resistance on Nokia. I'm only seeing 10,000 shares. It didn't hit 12 today, right? Yeah, it didn't, but not seeing heavy resistance there if it breaks through. Zeta, is that making a move? That is still red. ServiceNow. Someone said Anthropic put out a 3D engineering model today. Anthropic still down 4%. Or sorry, not Anthropic. ServiceNow down 4%. Is that true? Because if that's the case, yeah, here it is. Anthropic Claude now connects to tools that allows you to do 3D engineering conversions. Okay, but why is that bad for every software company? Like, maybe that's bad for freaking Figma and Adobe. But once again, I don't even think like ServiceNow deals with this type of, ticket management and workflow is not visualizing engineering workflows. Yeah, and they're partnering with Autodesk. That's just a dumb reason, dude, for ServiceNow and Salesforce to be getting hit right here. ServiceNow down, Salesforce still down. Yeah, that can't be the reason, bro, for software selling off today. Really, I think software selling off because the market's just buying more semis with it. Like, that's realistically what it feels like could be happening right now. Supreme Court will not be issuing a decision on Lisa Cook today. And we should be getting an update on Fed Chair Warsh, and if he officially gets approved later today, but it looks like that's going to be happening. If that happens before the J Powell meeting, then wow, Google 355. Then maybe market's not going to care about Powell. Maybe market's not going to care. Amazon too. Google and Amazon, just unbelievable here. Fighting through every resistance. Not stopping. Meta's lagging, but Meta flipping green. SPY also flipping a bit green. A bit green. You're seeing the big tech companies come back, or at least to an extent try to come back. Rebouncing before the May dump. It could be that. It also could just be buying them into the earnings print. And then maybe there's more of a rebouncing, but Robinhood down 13, Nvidia almost green, but that one's still down. Intel again, obviously the winner today. Wow, 92, 9% on Intel. There is no headline for Intel, folks, which is probably why AMD just went green, because AMD is moving with Intel now due to CPUs. But I don't see a headline today about CPUs unless the Seagate CEO, the Bloom CEO, Celestica CEO, if any of them last night said anything that would indicate CPU demand will continue to go up. Maybe that NXPI, I mean, any commentary around CPUs might be validating what Lip-Bu Tang said. Obviously, Lisa Su will really validate it if she puts up the right numbers. Those stocks are moving. Qualcomm, is that moving as well? That's up 3% as well. Fastly getting a little bit here at 5%. Amcor, that's up 71.40, just flipped green. Nebius, that one flipping green. Is Iren flipping green? Iren is still down, but it's making a little V-shape. CoreWeave, dude, the bulls are in control. CoreWeave, 8%. The bulls are absolutely in control here, even with oil hitting highs that we haven't seen in 3 weeks. Market doesn't care. Bulls don't care. Data centers don't care. Going up. SoFi still down 12. Poet down 14. Google and Amazon. Yeah, Qualcomm does have earnings today later as well. Can you talk about Hood earnings? If you go to the beginning of the show, we spent 20 minutes discussing it. So I don't want to reiterate everything I said, but spent a good amount of time talking about it. Ultimately, it just 15% growth is not enough. It's just not enough. Got to be objective here. With SoFi, 40% growth is enough, but the quality of that growth when it comes down to their operating margins is not that high quality. It's not in the part of the business that the street would give a multiple to when it comes to tech. So I think those are the two narratives for why those stocks got hit. Amazon, 265.30. 265.30 on semiconductor. That is also up 8% right there. Making your move. AMD continuing with Intel. If Intel is going to keep running like this, AMD is going to follow it. We saw that happen last time, and that might single-handedly help take the S&P up. Lending Club also down. I mean, Lending Club is a good sort of proxy for SoFi given the loan originations, but wasn't enough to change the quarter. Applied Digital, that's up a little bit. UNH almost at 370. Look at that. UNH was at 250 a couple weeks ago. This one completely flipped their narrative. That one's almost going green. And the Netflix at 90, 92. All right, let's finish up the last couple minutes with Bill Ackman, and then we'll try to get into some other stories, but this is his final pitch for why PSUS would be the right investment.
Our profits over the last 22 years came from what kind of basically long only, these durable growth companies. We get pretty deeply involved. We help them succeed. That's been 98% of our capital. 80% of profits, 92% of our capital has been about 20% of our profits. And that comes from things like our COVID hedge, or our hedge going into the financial crisis where we were short the credit of companies like MBIA and others. What's interesting is there is no other closed-end fund that has an asymmetric hedging strategy. The reason for that is you were not permitted to do so until August of 2022, when the SEC codified some new rules on closed-end investment companies using derivatives. We're the first one. We're the only. We have this sort of unique strategy, and now a closed-end an investor in this. Forget closed-end. An investor in Pershing Square USA can own our company, and we get exposure to businesses that we can drive value, and also they can hedge risk by virtue of participating in our
Bill,
hedging
real
strategy.
quickly, because I just want to end on this, because you referenced an offer for another company. You're talking about UMG, of course, Universal. They're reporting earnings, I think, actually, because it's over in Amsterdam or wherever it is. It's going to come out midday. Others characterize it more as you just said, you want them to change jurisdiction. You're adding a notable person, Mike Ovitz, to the board of directors, and it seems to have gone nowhere. Can you tell us why you think you have any traction?
Yeah, we certainly have traction, and the company has actually hired financial advisors. The reason why you haven't heard anything is, the board is handling the company, handling transaction on part of the company. I believe they hired Citigroup and Paul Weiss, so they're taking it pretty seriously. And what really matters is there's one 28% shareholder that's going to play a major role, and that's the Bolloré Group. We're certainly in touch with them. Obviously, I can't discuss. We would not have gone forward with this transaction if we did not have, at a minimum, a nod of interest from the French, who are very important shareholders. Importantly,
all right, that's what you got for Ackman. That's what you got. We will see that IPO in a couple of hours. Again, it doesn't make sense to me, but look, if it goes well, it goes well, and maybe it ends up becoming a good trade. We're going to see Amazon 265, S&P 711. Ondas, why is this thing tanking? What's going on with Ondas today? What's going on with Ondas? Because I don't fully understand why that one's getting hit. They did a share reoffering. The drone stocks have been a disaster over the past couple of weeks, even with a war going on. Look at Kratos. I mean, this thing was at freaking 80. Now it's at 60. They diluted it. Oh, well, there you go. I mean, I know a lot of people are bulled up on some of these names, but man, if they're diluting, and their business model is a little weird, they're acquiring all these smaller companies, and it's like, you can't blame them. The stock was at 50 cents last year. It's at 9.65 right now. I mean, it's just if you bought it at well above that, you're annoyed. But I don't blame them for diluting if that's going to help them grow. You still want to get caught up in it. Ondas right there, 960. Aero Environment as well. That one getting hit down 3% on the day. Mitral merger. Yeah, Palantir also down 4%. Again, defense stocks not getting any love, but Palantir here more software than defense, unfortunately. SoFi did say they're not expecting zero cuts, but they're keeping their guidance the same. So yes, that is bullish, 100%, because they're taking out the rate cut tailwind for them, which means when we do get cuts, they could really beat guidance if we get cuts this year. But once again, it just sucks because the market doesn't care. The market does not care. And unfortunately, it's, portfolio positioning around what the market cares about. But then again, as I said in the morning, the market cares about SanDisk. Who's selling all their SoFi to buy SanDisk? I just don't think a lot of people are willing to do that. Or forget SoFi, whatever loser you have in your portfolio that hasn't won this year. Do you throw in the towel and say, screw it, I'm just going to buy Intel and SanDisk and Bloom and Micron, and I'm going to get out of the losers? Maybe that really is the right play. But if it's not, it's going to really hurt because the margin of safety is not there. Then to break even, if Micron falls from 520 to 450, it has to get back to 520. Now, I don't think it's going to fall back to 450 because Seagate was too good. But if that were to happen, right, that's the hard part. Marvell 155. Marvell 155. Same thing with Lemonade. What do we have to do? Yeah, look, I've never fully understood the Lemonade thesis. We did a deep dive on the channel. I've talked to some people about it. I do think it's relatively cheap. The problem is the argument for why there's a moat, which forget its valuation, just figuring out why it's exciting, is they use AI to underwrite your insurance. And I've just never fully understood why that's so exciting. Like I have asked Farzad about it. I don't get it. I love Farzad, but I don't get AI driven underwriting for insurance. And I'm probably oversimplifying it. The growth is good. Don't get me wrong. There's good growth here. I just think that as a moat it's a little confusing compared to, once again, if you compare it to big tech, it's like, all right, there's obviously better bets that are safer than something like that. Yeah, legacy insurance also, competing with the Allstates of the world is not that interesting as well. Intel, you want 92, but there is a big cult around Lemonade. There's people that do really, really good research on it. I just personally don't love it. I think the company is a strong company. It would be hard for me to be like, I'm going to keep my money there for the next 5 years. Like I wouldn't be able to stay in the story. Intel, almost 92, 91.83. It did touch 92 for a second. Volume on SoFi, 100 million shares. Fiverr's up 23%. Why the hell is Fiverr up today? Fiverr, what is their stock? Fiverr. This thing's been dead for a while, right? FVRR. Why is this pumping? Do they have earnings? Fiverr? Huh. I don't see earnings. It's just going up for the hell of going up. I don't see it. Do they have earnings? Oh, they did. EPS 62 cents versus 61. Revenue 105 versus 104. They beat by $1 million on revenue. They beat by a penny on EPS. Stock's up 20%. What the hell did they say? What the hell did these guys say? Oh my goodness. 1260. There you go. 21% on the day. Big Bear AI. Okay. I know a lot of you guys in the chat were excited about it in the pre-market because it was getting up to 430. No, now it's down 6%. I have no idea why it pumped to 430. I have no idea why it's down 6%, but I think it's really important, once again, just like Poet, to look at the actual business. I've looked at Big Bear's business. The growth is not encouraging. It's just not. I know people want this to be the next Palantir. They've been saying it for the past 3 years. There's not growth that's there just because they have AI in the name. I mean, ask C3 AI how that went. Like, and this is what I mean about price action, right? Like people were going crazy in the pre-market that Big Bear AI was up 5-6%. Now it dumped 6%, and like that excitement is gone. So like all the excitement was rooted in price action, not some deal or something they got that's so important or amazing or proves the thesis. You're paying 14 times sales for something that's barely growing. And, valuation matters if you're not putting up Bloom numbers or Seagate numbers. That's when valuation really matters. So I think there needs to be just a lot more excitement around the actual business. So same thing with Poet, right? Valuation didn't matter until it mattered, but the underlying business was not in the best spot. ARM right there, back above 200. AK Media needs to add AI to its name. Maybe that's what changes it. Big Bear AI has ads all over DC bus stops. Yeah, I mean, look, I don't know how relevant their advertising. I've looked at the growth of this company because people have asked for years, and I've never understood what is exciting about it as a growth stock. So there's got to be something else that people care about. And people point to like their airport partnerships. I'm like, okay, cool, but like, where's the growth? Like, yeah, they have a partnership in the UK with some airport. Like, but what does that mean for growth? How does that actually grow the business? HIM's also down 5% right here. It's service now. I know a lot of retail is buying this thing. This is just so annoying for it to go down again. There's not really logic for why it's down. Why is Teradyne down 18%? They were up 90% going into the print. I think that's why they're down. I think. Now they're only up 53% going in on the year. I mean, because Teradyne, like Roy was talking, he understands the business a lot better than me, and He was like, dude, this was absolutely smashed. Senior Pentagon official says the U.S. has spent $25 billion on the war so far. $25 billion on the war so far. Hegseth is testifying right now to increase the budget. So that's the official number that we've spent.
Thank you for that question. So approximately at this day, we're spending about $25 billion on Operation Epic Fury. Most of that is munitions. There's part of that it's obviously O&M and equipment replacement. We will formulate a supplemental through the White House that will come to Congress once we have a full assessment of the cost of the conflict.
Sure. So you're saying the full cost at this point is $25 billion?
Yeah, that's our estimate for the cost.
Okay, interesting, because I'm glad you answered that question, because we've been asking for a hell of a long time and no one's given us the number. So.
All right, there we go. $25 billion is what we spent of taxpayer dollars. Palantir 135. Intel has a date with 100. 92. 92. Nokia can't break through 12. It's trying. It's really trying. Can't break through yet. But 92.21. Dude, 9% is kind of crazy. Again, there is not a single thing I'm looking to or I can see here that could justify that big of a move. And that's actually not a good thing. We should have a headline, because if we don't, it could just be people FOMOing in for the hell of it, which is never healthy, especially on super large caps. But sometimes it is inevitable. I'm going to go to Seagate's earnings real quick. And I'm just going to Command F CPU. Let's see if we get anything in the transcript, because I feel like one of them had to say something. CPU. Nope, nothing. Intel. Do I have anything there? No, nothing for Intel. Nothing for CPU or Intel. Nothing for even servers. They got a $100 price target. Yeah, but they got a couple $120 price targets last week, right? So I don't know. Maybe a delayed reaction from those earnings. But there it is. Amazon and Google as well. Moving up 265 on Amazon. On Amazon. SanDisk officially hits 1100. There she is, up another 9% today. SanDisk now $160 billion company. Micron at 525. Oracle getting hit with the IGV sell-off today, but that one almost flipping green with the rest of the data centers. Intel's pumping because I sold this morning. But Kevin, what was your cost basis? Because if you got a nice little win on that, then it is what it is. We got some clips of Hegseth making his case for the war going well for the U.S. so far.
So they haven't broken yet. Okay, we haven't gotten there yet for all of the.
Well, their nuclear facilities have been obliterated. Underground, they're buried, and we're watching them 24/7. So we know where any nuclear material
reclaiming
might be.
my time.
We're watching
a second here. We had to start this war, you just said, 60 days ago, because the nuclear weapon was an imminent threat. Now you're saying that it was completely obliterated?
They had not given up their nuclear ambitions, and they had a conventional shield of thousands of
missiles. So Operation Midnight Hammer accomplished nothing of substance. It left us at exactly the same place we were before. So much so
their
that
facilities were bombed and obliterated. Their ambitions continued, and they're building a conventional shield.
Right, let me try again.
It's the North Korea strategy. You know this very well. The North Korea strategy was use conventional missiles to prevent anybody from challenging them so they could slow walk their way to a weapon. President Trump saw Iran at its weakest moment, took an action to ensure, in a way that only the United States of America could do with our Israeli partners,
and yet
to ensure their conventional shield was brought
one
to
other
the
question,
we've done.
if I could get to it. So,
okay. Hegseth going back and forth. to explain why we're in this war. Intel keeps moving. ServiceNow keeps dumping. Poet continues to keep dumping, 15% down. CoreWeave keeps pumping. Your winners today are CoreWeave, Intel, Western Digital, NXPI, Astera, getting a bid right here, Broadcom, and then Seagate up 15%. Pretty freaking big move, man. Pretty freaking big move on these data center plays. Applied Digital also flipping green. Solaris Energy, that's up. Fortunately, SoFi and Hood not getting some love there. Okay, so what's sentiment on SoFi and Hood looking like? Are people out? Are people buying? I have not bought the dip on any of these two today. I've literally not done anything yet. The earnings, quite frankly, makes it a little tough to justify buying the dip on Hood. Like 15% revenue growth is just not good. They're going to have to really reverse that in Q2. SoFi, you could buy the dip on it because the earnings were good. It's just like, once again, is there an opportunity cost to not being in Micron versus SoFi? Same, question about opportunity cost with Hood. Same question with Rocket Lab and ASTS as the space names get obliterated. I guess the SpaceX IPO, not enough for the street yet to be excited. Seeing a lot of SoFi dip buys. A couple people saying they sold. Opportunity cost is pretty bad right now. Yeah, I mean, it's definitely not the best. Is there a reason for CoreWeave pumping? No, I don't see so. At least not at the moment. Do you think Hood goes back to 30? No, I don't see that. I obviously it could fall below 70 right here. Look, the core business is functioning and it's a better business than what it was when they IPO'd. Significantly better. But they've obviously got to diversify streams of revenue, and the market has to continue doing well. That's the scary part about Hood is what if the market tanks for the next 3 months? Because we've had a pretty good run. What if the market takes a sell and may go away? What happens to Hood at that point? I think it goes down a lot. I think Coinbase goes down a lot. Like these sensitive driven names towards obviously high beta names will get wrecked as well. But the point is the names that are contingent on the market doing well probably get hit the worst. Reddit right there, 145. That's down 2%. Chef Mike says I'm going short BTC. Where is Bitcoin? It was at 77.5 yesterday, now 76.5. Uzi says considering getting rid of SoFi, holding on to Hood, don't need both in the port. Yeah, that's the other thing. Multiple allocations of fintech if fintech's not the wave. Now, granted, the sentiment on fintech is so bad that I wonder if, and this is always the fear, right? Like if you sell SoFi at 15, is that selling the bottom? When theoretically, terminal value is probably closer to 18, 19, and it just naturally gets back there without too much work. Worse is if you sell it and then you go into Micron and then Micron dumps, right? Like that's like the hard part about it. But if you don't care that Micron dumps because you're just going to buy more because you are convinced memory is in a super cycle, which again is not that a crazy thesis to believe in. I don't think anyone's crazy for thinking memory will be fine for the next 3-4 years, not just the next 3-4 months. Then maybe you don't care if you make a pick that ends up getting hit pretty bad. Intel 93. 100 looks like it is eventually on the way. Will you be live for FOMC? Yes. I'll be live at 2:15. 2:30 is when we get JPOW, and then we'll go from FOMC into big tech. Into big tech. AMD is moving with Intel. Now, again, AMD got a pump to 350 before it took a breather. Intel's just hitting new all-time highs. So AMD, it's seen these levels before. Intel has never, because Intel's breaking up. Obviously, AMD with as well. Intel's going to dump hard. I don't know, dude. The demand, at least on the CPU side, seems, at least from how Lip Butang said, unlimited. I mean, he said 8-1. If Lisa Su comes out and says, yeah, it's pretty much impossible for us to supply all this demand. I mean, I wonder if AMD sees 400 this year and just rockets up and it's game over. And maybe that doesn't change anything. Amit, have we not learned anything from prior investors that have always said they should have been more patient? Yeah, look, there's two components to it. The problem with being patient here is patience is not only a virtue, patience is being tested in a market where the earnings capacity for growth is not happening on the assets that you're patient with, right? Like when Hood and SoFi were originally $5 and $6, Palantir was $6, Rocket Lab was $4. That is where I think Grab is in that stage right now. That's where you have to be patient because the story hasn't happened. The story on Hood and SoFi has happened. This is not about patience anymore. This is about them inflecting as a mature company their growth story. Patience was 4 years ago in the bear market when they were trying to become a big boy company. They're both big boy companies. They're both doing $1 billion of revenue every quarter. Now it's just like the market doesn't like them. And is it a question of patience or is it a question of genuinely being in the wrong sector? I think right now it's obviously being in the wrong sector, whether it's software or fintech. It's in the wrong space. It's in the wrong sector. More than it is, a lack of patience on these names. Does that mean you get rid of this sector for another sector? I don't know. That's a very hard thing to do after these names have run up so much. But I can't imagine some people as market participants are not thinking of doing that. Nokia breaks through 12. There you go. Breaks through 12. If AMD announces an Anthropic deal, I agree with Bibby. If that happens, yeah. AMD is going up. Up. Yeah, Zeta is in a patient stage right now. Zeta has not had the breakout. Very small company. If you believe in management, you believe in, I think 40% growth is what we're about to see on Thursday. Then the breakout hasn't happened. But Zeta's also in the wrong sector. And so they're going to have to really put up the growth to justify it. So I don't really know if it's a patience game anymore. Because patience is when you're waiting for management to get their shit together and prove they can do it. So Noto's done it. Vlad has done it. Right? Like these companies have done it. It's just now they're not the favorite names to be having capital allocated to right now. GameStop is down 4%. That is also down. BM&R. Oh, Tanner did a good video on BM&R yesterday. I suggest people watch it. I didn't know this because I don't keep up with every last detail of it, but Tanner tracks it pretty closely. Apparently, they are diluting below MNAV, and that is part of the reason why they're getting hit so much. And look, if they're diluting below MNAV, and the reason, which Tanner's video implied, was that they're diluting below MNAV because Tom Lee is just trying to accumulate as much ETH as possible, 5%, because he gets a massive compensation package that is unlocked once they surpass a certain threshold of Ethereum, which is what their compensation structure looks like. It's not really performance-based. It's AUM accumulation-based in the context of ETH. Then exactly as Nick says, Tom Lee is using BM&R as a piggy bank. And quite frankly, if that's what's really happening, I'm just going to say it right here. I think his reputation is completely tarnished for the rest of his career. Like, if that is what he's actually doing, which again is not confirmed, even Tanner's not fully confirmed on it, but that is the theory because he doesn't know why they have a $4 billion buyback, and it would be cheaper on a per diluted share basis of Ethereum to buy back the stock, not to buy ETH. Like, it's literally cheaper ETH if they buy back the stock because they have more ETH per share because the stock is trading below MNAV. If that is the case, I'm sorry, but it's over. Like, it's over for him. And it doesn't help, quite frankly. It really doesn't help when he puts out certain posts on X. And, I saw this the other day and I was like, dude, what the fuck are you doing? Like, genuinely, it made me say, what the F are you doing? I don't know if you guys saw this, but congrats, SBF. Outstanding. He's tagging the guy in jail that stole tens of billions of dollars and saying, congratulations. Like, what the hell are we talking about here? What are we doing? I don't care if this guy was the best investor in the world. He lied, manipulated, and frauded investors, and he's in prison for 25 years. And you're saying congrats? Like, at some point, I have to look at your judgment. Forget morality or ethics. We're not even going that far. We're just looking at business judgment. And you're saying, like, even if you think SBF is one of the greatest investors, I'm not going to publicly tell all my followers, hey, man, congratulations, this guy's awesome. Because some of my followers probably lost a ton of money if they were involved in FTX or knew someone, because a lot of people lost money who were involved in FTX. It was a $32 billion company. And they probably don't have the best opinion of the guy. Not because he got a stock call wrong. Not because he said, oh, I'm bullish on this stock and the stock didn't move to that level, but because he manipulated and literally lied to advance his own personal gains. Like, am I being too harsh there or something? But like, I saw that. I didn't say anything about it. And then I saw Tanner's video last night and I'm like, okay, if the guy is intentionally diluting to get paid and at the same time he's slapping you in the face by saying congratulations to the biggest grifter we have, I don't know. Vlad screwed retail and we forgave him. Look, I think there is a debate on how Robinhood handled GameStop. There's like a legitimate debate. And did Vlad mess up there? 100%. Did Robinhood, the company, mess up? 100%. And obviously there's a lot of people that hate him. But I do think there is a debate on the structure of clearinghouses, the money that was raised, volatility, yada, yada. Like, there's nuance to that. There's no nuance to diluting below MNAV when you have a $4 billion buyback program in place. There's no nuance. Like, and if there's nuance, someone tell me what the nuance is. Because it is literally cheaper Ethereum per share on a diluted basis by buying back the stock. And I'm willing to listen to the people on the GameStop side of the debate when it comes to I think there's a legitimate argument to be had. And I think there's counterpoints. I don't think there's any counterpoints when it comes to the BM&R discussion. And I also don't think Vlad would publicly tag SBF and be like, yeah, this guy's a great investor. Congrats. And if he did, I would publicly criticize him. And I've been pretty vocal in my critique of Robinhood over the past couple of months in terms of some of their product updates. So I have no problem critiquing Vlad if he's out there publicly saying, yeah, SBF is awesome. Like, you know, so it's like, I don't know. Tell me if I'm overthinking it, but Tom Lee wanted to be Saylor and I think he failed. Yeah. And you know, it's also, Saylor started buying Bitcoin when it was 15,000 and it's 70,000 now. You know, so even though Saylor is basically break even on his Bitcoin, he did start buying it at a much lower price, which is why MicroStrategy has 10x from the lows or 20x from the lows. Tom, unfortunately, bought the top of ETH, which you can forgive someone for buying the top. But if they're intentionally continuing to do it in a way that gives them self-gain, I can't forgive that. Like, that's just, it's a bit tough. It's a bit tough. Joby, is that getting a pump from that New York thing? No, that's down 5. That was up yesterday. The Joby video, I'll pull it up in a second. That was actually really cool. Like, I would love to take that flight from New Jersey to New York, but I wonder how long it'll take until that becomes material. You should try critiquing Elon. Oh, trust me, I've critiqued. Dude, the amount of times that the Elon cult has gone after me, and I'm an Elon fanboy, and I still critique Elon. But I don't critique Elon for his political stuff because no one cares about my political critique of Elon, and I don't want to give a political critique, but I've critiqued, dude, the SpaceX valuation is stupid. It's absolutely stupid. $2 trillion, are you kidding me? Fast tracking S&P and NASDAQ inclusion is an obvious grift. Like, that's not real. Like, forcing people to buy an overvalued asset to get included in the other. Yeah, that's horrible. But I do not think that is as concerning as someone like a Tom Lee, because SpaceX actually has something of value there, right? I can disagree on the valuation of SpaceX. On BM&R, there's no value. Their whole function is to be a treasury company, and they're doing the one thing they're supposed to be doing incorrectly, which is buying ETH cheaper than what they dilute for. So I can criticize Elon for a valuation on SpaceX that I disagree with, which quite frankly, I'll probably be wrong on because it's probably going to get bid up. But that critique pales in comparison to, you know, I can critique Robinhood for not really having a good diversified business and it being too cyclical, but that critique pales in comparison. You can critique Noto for 3 years and barely getting the fintech platform to show any type of growth. But that pales in comparison to someone intentionally diluting retail in order to get paid. That to me is the broader issue. Having said that, let's look at Joby. Revolutionize air flight. I can't buy Joby either, dude. I don't see the vision yet in terms of this thing as an operating company. I know people like it, but it is pretty cool. I just can't buy the stock, dude. Same thing with Archer. I can't buy the stock. Like, the stocks are not investable yet, in my opinion. But the video is cool. This is what red days make you do. Exactly. But I'm not crazy, right? When I saw that post about SBF, I was like, hold on. Hold the heck on. This is a bit crazy. And look, if ETH goes to the moon, all will be forgiven. All will be forgiven if ETH goes to the moon. But ETH's not going to the moon right now. And they're diluting. And they're diluting at the behest of shareholders. The business model is to dilute, but not to do the one thing where they're not supposed to dilute, which is when they're below MNAV. Same thing for MicroStrategy. They're not supposed to dilute below MNAV, which is what at least Saylor has done a relatively good job to try not to do. I just didn't like it, dude. I personally didn't like it. And I don't have anything against Tom. Again, I had an interview with him. I think he's a very smart guy, but this whole crypto thing is concerning if his personal compensation is the basis for why he went down this rabbit hole. Like, at least Elon gets compensated if he freaking builds something of value, right? Even if I think the valuation is crazy and fast tracking into the NASDAQ and the S&P is absolutely insane and it doesn't make much sense and it's, forcing people to buy it. The point is, he personally doesn't really make any money until he gets like 100 terawatts of compute a year, or gets like 1 million people on the moon. I think was in the S1 that they have to be like, they have to have a moon colony. Like, that's like really hard shit to do. Tesla 2018 to Tesla 2021, 10xing the stock. Like, that was really hard to do. No one believed he could do it, but that's why he deserves to get the payments that he's getting. And that's why I thought the Delaware judge was absolutely ridiculous in striking down his payments, because, and I don't even think that's political. I mean, like, the guy accomplished his mission. Like, he deserves to get paid. But if your mission is just buying more ETH with assets that you collect, there's no mission there. And then if you're doing it in an unhealthy way, then there's definitely not a mission there. And I think that's the broader issue. Google right there, 351.94. That is green. It's a shame you got an interview with Tom Lee and now you're disrespecting him. I don't think that's shameful. I think that's actually the most integrity-driven thing I can do. I think what would be shameful is if I interviewed someone and I can never critique what they're doing if I genuinely think what they're doing is a really bad thing. And I'm sorry, but telling SBF that he's a great investor after the guy frauded tens and tens of billions of dollars publicly, I don't care if I interviewed you. Like, I think that's a pretty crappy thing to do. So that's how I feel about it. I don't care. There's a reason we have free speech. Like, and if this ruins a chance of getting an interview with Tom, then so be it. Like, I don't care. If Bill Ackman never wants to sit down with me because I critiqued his Pershing Square IPO, then it is what it is. There's some battles you just don't worry about fighting. You have to be able to be honest. Otherwise, why would people watch you? Why would people ever trust they can listen to you? So it is what it is, but I didn't like that. I absolutely did not like that. Tom Lee wants to be Berkshire. He has to get to 5% to pivot to that. Yeah, but you can't get to 5% at the behest of shareholders doing the one thing you said you wouldn't do, which is diluting below MNAV. Like, here's why it's so screwy. They have $4 billion allocated to buybacks. But if they buy back stock, they don't get closer to ETH, which means Tom doesn't get closer to his compensation package. That's why it's like, do you think Warren Buffett, forget the crypto business model, but you think Warren Buffett would ever make that egregious of a decision at the behest of shareholders? Warren Buffett got Kraft Heinz wrong. That hurt shareholder returns. But that's because his judgment on the stock and the company was wrong, not because he was genuinely trying to screw over people, right? Or doing something intentionally. Everyone gets things wrong. Tom could be buying cheaper ETH right now by buying back his stock, and he's not. And that to me is just a personal gain because his compensation is rooted at 5% of ETH. That I think is an issue. 1750 on Zeta. Are you using the word behest correctly? I don't know, but I hope I am. Because in the middle of a rant, it is very embarrassing if you're trying to use a big word and you completely mess it up. And I'm sure I've done that more often than not. So I hope I used it correctly. Is he actually diluting below MNEV? Go watch Tanner's video. Tanner tracks these numbers better than anyone on the planet. So I trust Tanner, after all the calculations he's done, that yes, that's what they are doing for the past 3 weeks. But for even if he's not diluting below MNAV, why are you saying SBF is a great investor publicly? What is going on? It just rubs me the wrong way. Maybe it doesn't rub other people the wrong way. Maybe you think SBF is super cool because he made early investments. It's okay, you could say that. But then publicly just saying outstanding, amazing job and not acknowledging all the shitty things he did is, I don't know. It's weird. It doesn't make sense to me. AMD 329. 329. OpenAI investment is calculated differently for BMNR, so the intraday wild moves are, and that's the same thing for Orbs, right? Because Orbs also, this thing, you got to believe in WorldCoin to make sense of this, and this one also just never made sense. And this one on day one, look, I thought BMNR made sense because I understood ETH. I don't understand WorldCoin, so Orbs to me never made sense, but the YOLO investments into OpenAI to try to save the stock, I don't know. It's just not really exciting. What is the strategy once he reaches 5% stake in ETH? Do you think he'll pivot towards creating shareholder value at that point? I don't think it matters until ETH goes up. Whether he had 5% or 50% or 2%, the staking revenue is irrelevant. ETH has to go up substantially, which means we have to get out of crypto winter. And look, we get out of crypto winter, ETH's back at 4,000. People aren't going to give a shit about anything Tom has done because it's, the stock's going to go up. Quite frankly, that's what happened with Hood today. All the people that hated Hood because of GameStop, Hood started going up. People stopped caring about it. So once again, this is definitely a bear market driven sentiment thing, but I think there is some truth to the process in which it's happening. And once ETH comes back, if ETH comes back, which I think inevitably it will, all might be forgiven. But as of now, that's how it's happening. So I don't think there is any shareholder returns until ETH goes up. It's not like Microsoft this afternoon that could actually hopefully put up results. CoreWeave still moving. 112.62 as that continues to go green. Do you still have your BMNR? Yes. That is also why I'm so passionate about this shit. Because when I saw freaking Tanner's video last night, I was like, wait a second. I just don't keep up with the investment as much anymore because there's just way more interesting things in this market to care about. Crypto's dead. There's not at least Robinhood, there's stuff to keep up with because it's not all crypto. So to me, all right, price of ETH is down, price of ETH is up. Okay, that's BMNR. That's it. There's your thesis. When I watched this video, I was like, wait a second. This is now getting a bit more concerning. This is not just a ETH up or down narrative. This is now potentially, this is a more manipulated version of what's happening here. And that's confusing. It's Galaxy pumping with it. Galaxy 2532 down 4%. All right, so JPOW is not going to be on for a couple hours. We're not going to get a Fed cut today. Jim Cramer just tweeted, Intel is such a horse. I have no bear case. Dude, I think he knows what he does every time he does this stuff. Why don't you like Joby? I just don't think the business models of Archer and Joby have any real earnings potential in the moment. I think they are good ideas. I know Josh Brown loves both of them. He was on our podcast. We talked about it with him. I'm just not willing to take the risk on those startups right now. To me, they're startups. And so I think when Meta's trading at 18 times earnings, I'm not going to buy Joby or Archer. I'm just not doing it, But long term, if you believe that it's going to work, then maybe it's something there. But Archer hasn't shown anything for years. Joby finally showed something at this New York event. I think these are more ideas than not. He said that at 11:02. Intel is down from. Intel's down now. Well, to his credit, it pumped after 11:02, but it's down from the highs. But hold on, there is absolutely a bear case for Intel. It's very simple. It trades at 120 times earnings. Unless valuation doesn't matter at all. But you're telling me that's not a bear case? That it's expensive? That's got to be somewhat relevant as a bear case here. If it's not, then all right, send Intel to $1 trillion at that point. Go ahead. Intel's $500 billion right now. It didn't matter for Palantir. Okay, but Palantir was growing substantially. Intel put up 1 quarter of growth. The question is, can they continue to do that? And we don't know. Palantir didn't get that premium until they showed off 2.5 years of that growth being stable. I guess the market's just assuming Intel's just going to keep growing, which is honestly not a fair assumption, or it's not fair to have that assumption, because obviously if you believe in that CPU thesis, which so far that's what the market's believing it, then yeah, I guess you front run the growth. But I guess time is going to tell if that actually gets there. Intel fabs are super important for the US. That is also true. I mean, quite frankly, it's something that I've been talking about for a long time. But, you could say in an abstract theory that Intel fabs are super important for the United States. Until the company puts up the growth, that can't be a thesis, right? Everyone who had an Intel important because of hedge to Taiwan thesis, that's just a thesis. That's not really why the stock is up. The stock is up because they just beat earnings by 2,900%, right? So to me, if that thesis materializes in continued growth on earnings because the country keeps investing in them because we want to combat TSMC, then for sure that would be your bull case. But right now it's being priced as if that bull case is inevitable, and maybe that's getting their fabs aren't worth that PE ratio. Maybe they are, right? I mean, maybe they freaking are. At least the market thinks they are. Even if there might be a bigger concern about that from a numerical perspective. This is Seagate's numbers. Let's pull that up right here. Gives us a better sense of why the chip stocks are all moving heavier today.
Going into the print, but it actually blew past expectations. Q2 revenue guided up more than 8% quarter over quarter. The street was looking for roughly half that amount. Auto back above seasonal levels, industrial doing the heavy lifting, and data center revenue, this is key, expected to more than double this year. And that's why shares are up almost 25% right now. And then you've got Seagate. They make the hard drives that store data inside AI data centers. Shares are up almost 15%, but revenue specifically for the quarter was up 44% year over year. June quarter gross margins guided to 50%. And the CFO mapping out revenue and margin growth for the next 5 quarters. You don't normally hear 5 quarters out. Some cloud customers are already placing orders well into 2028. And that is what is lighting a fire under the memory names across the board. Western Digital's storage name is Seagate's biggest hard drive competitor. Shares are up almost 10%. It reports tomorrow afternoon. Then you have SanDisk and Micron also bouncing. The story here is that AI inference needs more memory density. Supply isn't necessarily keeping up, according to a lot of these CEOs, and pricing is just going up across the board for DRAM and NAND, as well as hard drives. And so that's why you're seeing this sector up. All of this is coming after what turned out to be a very, very short-lived pullback. The stocks or the semi sector had a 45% 1-month rally, dropped about 4.5% over 2 sessions just over the last 2 days. One of the drivers yesterday was the Wall Street Journal reporting OpenAI's growth targets and potential to pay for compute. And now right back up where we started, about 2% higher, but still 35% on the month, which brings us to the big picture number. Semiconductors now make up roughly 14% of the US stock market by weight, a record, roughly double where they peaked at the top of the dot-com bubble, guys.
But it's different this time, right, Christina?
Right.
No, I mean, right, go ahead.
Well, to your point, it's different this time because it's extending beyond the AI compute names that we often see. So NVIDIA had its moment, AMD had its moment, even though it's up now. And now we're seeing it on the peripheral, the other picks and shovels that would be even like, the equipment names that we don't talk about as much, Synopsys, Cadence. And then today, all of the analog names with Texas Instruments just a week ago saying that the recovery is underway, or NXPI. Auto is starting to trend higher. And so that's doing well for that particular group. And why we're seeing it bought up so much today, because it wasn't as popular as a lot of the AI compute names. One special mention, though, Intel, also up about 10%. There was a report coming out from Asia saying that Google and Apple, Google may be looking at the advanced packaging, Apple looking at more of the advanced chip processing. So that's another big mover that seems to every day defy odds and keep climbing higher.
Absolutely. Thank you, Christina. Christina Partsenevelos. Tonight kicks off a high-stakes slate of big tech.
So that's what you got for Seagate. Obviously, kicking off a lot of momentum across these names. Here's the update on the Elon Musk Sam Altman trial, which started yesterday as well.
Going on. We also expect cross-examination later in the courthouse. Musk was a co-founder of OpenAI. He sued back in 2024, claiming that the now $800 billion AI giant abandoned its founding nonprofit mission and deceived him in the process. We've heard a lot about that in court this week. In opening arguments yesterday, Musk's lawyers tried to frame this as OpenAI leaders stealing a charity. They boiled it down to that point. Musk and Altman, if you can believe it, they were good friends a decade ago. They founded what they called at the time the Manhattan Project for AI to take on Google after it acquired DeepMind. Musk also said that he was close with Google's co-founder, Larry Page. We heard a lot about Page yesterday. According to Musk, Page accused Musk of being what he called speciesist and pro-human. He said that was actually the tipping point to go out and found OpenAI with Altman. The risk of AI was also a massive theme in Musk's testimony yesterday. At one point, he said the technology, on one hand, it could make us more prosperous, but on the other hand, it could also kill us all. This quote really stood out. We want to be in a Gene Roddenberry movie like Star Trek, not so much a James Cameron movie like Terminator. Musk also claimed at one point that he introduced Microsoft CEO Satya Nadella to OpenAI. Microsoft, of course, an investor in OpenAI, also a co-defendant in this case. And then Musk also says he secured OpenAI's first supercomputer from NVIDIA through his close relationship with Jensen Huang. Altman's lawyers on the defense in opening arguments said at the time, Musk is a competitor. They said he's doing everything he can to attack OpenAI, and what he cares about is Elon Musk being on top. They said that we are here because Musk didn't get his way. What Musk wanted, according to OpenAI's lawyers, was to control OpenAI. They argue he did actually want OpenAI to be a for-profit. For example, he did attempt to merge it with Tesla at one point, guys.
Okay, thanks very much, Kay Rooney in Oakland for us today. For more on the legal battle unfolding.
I wonder if Elon actually makes enough of a case to win it. I mean, he's got a hell of an argument in regards to the nonprofit profit thing, but he's got to convince a judge and a jury that his argument makes more sense. Robinhood, a little bit of the bleeding stopped at 70. We're at 71.30. Micron down from 531 to 520. Amazon down from 265. SanDisk still up 9%. Google getting hit at 355, but still green. Is oil down? Oil still at 105. Brent's at freaking 117. So that's not really helping the broader market, but SPY's still flat, guys. I mean, I guess we're waiting for J-Powell. But SPY's flat. Starbucks is indeed up 9.3%. This is the best, again, same-store sales for the first time in 2 years finally went positive. It's the best quarter for Starbucks in a long time. Are people drinking more Starbucks or eating more at Starbucks? I still think it's relatively expensive compared to other places, but they're doing something right to get this to flip in the right direction. Let me pull up oil futures again. Crude is 105.50. Brent's at 109. Okay, I had another website tell me 117. That might be wrong. 109. Did it get to 117, Brent? It did get to, oh wow, it did get to 117. Okay, so it's down, but it did indeed get to 117 10 minutes ago. So that quote was delayed by 10 minutes, but okay, so at least Brent is down, crude is up, but I mean Brent is still up on the day. It's just not up as much, and then natural gas down 1.5. The VIX is also up a little bit, 2%. 2%. Let's look at the stock draft. Let's take a look at that. Would you contact BM&R Investor Relations with your concern? I don't really believe in class action lawsuits. I don't think that actually gets stuff done. I think it's also super complicated and messy, but I do think there are people that could. I'm not going to spend my time doing that. I don't have the time to reach out to an investor relations, but I mean, I could imagine people reach out and be like, yo, now granted, people do that all the time when the stock is down, right? You have to have a real legitimate claim for a class action to actually be legit. And quite frankly, I'm sure there's a ton of stuff inside of BM&R's risks and disclosures that basically insinuate they can do whatever the hell they want. So their lawyers will come back at you and be like, actually, when you voted for our directors, here's what control you gave them. So I don't think that would matter anyway. Okay, Matt's at 28.37. I'm at 28.36. 28.36. So we are catching up even with Hood down today and Pounter down and Grab down. Visa giving us some love to come back. We are close potentially to going to first place. Tanner's at 7. Steve's at 17. Steve's had a hell of a comeback. Look at this. Steve has 2 winners. 8 out of 10 names for Steve are red. 2 of them are down by 50%, and Steve is still at 17. That's the magic of one name making your year. And Micron did it for him. And then Chris is at 10.6. So we're going to see what this ends up looking like. It is just paper money that is correct, but it's, it's bragging rights. It's friends. It matters more than real money, to be honest. Like with your friends, it's like, it's more fun. Sometimes that's all you need. But that's what we have on stock drafts. Starbucks 106, Intel 93.20. I think Intel wants to go for 94. It got to 93.73. And that one is still up on the day. Micron 521.60. You could say it's paper gains. That is correct. You could say it is paper gains. Amit, are you still confident with Pounter going down? I don't think Pounter is going down today for anything Pounter related. I really think it's whatever mood the market woke up with to hate software. But I mean, I don't know. Earnings, look, Pounter's going to have to crush it. As much as I believe they'll crush it, at this point, they will have to absolutely demolish the numbers. And if they don't, the stock will go down. It's just that simple. I mean, if ServiceNow goes down on those numbers, if Microsoft went down last quarter on their numbers, Pounter will have to absolutely demolish, which I think they will do. I don't have any reason to believe they won't do. But if they don't, yeah, unfortunately, we're going to see some red, especially because it's in a sector that no one likes right now. What's the benefit for Pounter is because it's in the sector that no one likes, if they have the best earnings out of everyone else in that sector, maybe they get the premium, which is basically what Intel's doing in the context of CPUs. But it's going to be up to them. Do you use Savvy Trader? I do not. I have not used Savvy Trader. Powell's at 2. We're going to leave in a little bit. I'll be back at like 2:15. We were not doing an all-day stream. I need to save my voice for at least a couple hours. Neil and Jose will be with me after hours. Tanner will be doing Google, so he'll be separate stream. We wanted to do it together, but it doesn't make sense because we're all not going to be able to stream every company at once. So if you want Google, you'll be with Tanner. If you want Meta, you'll be with me. We'll switch to Amazon. Obviously, we'll cover all the companies before the earnings call. But that's the setup for today. Is it good to buy SPY puts for today? Look, I have never done a 0 DTE. I think to even ask that question, you have to have such a sophisticated understanding of technical analysis, macro analysis, and then derivatives to be able to buy a 0 DTE. Or you're a gambler, which is also fine. But to buy an option contract expiring in a couple hours, assuming that the price will hit your target down or up, you can make a lot of money doing that. But it's just the probability is a little tough. So no, I would not be buying puts on the S&P for today. I think even if J. Powell's hawkish, the big tech companies are going to crush it, and hopefully that recovers the earnings. But also if J. Powell's hawkish, that's probably priced in. I mean, he's not going to cut. We already know the probability is basically nothing for a cut. Yeah, look at that. Forget basically nothing. CME is like, yeah, it's 100% not going to be a cut. They're not even giving us 0.02 like they did last time. So we're not getting a cut. So hopefully it's priced in enough for the market. What are you thinking about TTD? TTD, Barron said this one could squeeze. The fact that the CEO bought 150 million worth of stock. Now, I know he sold a lot of stock too, but the fact that he bought that much and this thing can't get a bid is quite incredible. But yeah, it's not really done much either. IBM is deepening its bet on the Illinois Quantum and Microelectronics Park in Chicago with plans to add 750 jobs over the next 5 years. Where is IBM? That one didn't recover either. Yeah, 230. That one's been hit all month. 250 to 230. And then you have BTC. That's 75.9 almost. Intel, did we hit 94? Wow, it touched 94, 11% on the day, folks. Okay, there it is. That's your story for today. Starbucks, Intel, Micron, Seagate, CoreWeave, AMD, SanDisk are the winners, and I guess we're going to see if they continue winning throughout the entire day. Okay, cool. That's it for me. I will be back at 2:15. We will get J. Powell, and we will get the big tech earnings. We'll see how they do. Hopefully it's good. I think a lot of us are invested in pretty much all of the big tech names. Obviously, some people have higher holdings than individual ones, but everyone, I imagine, will be waiting for it. And it's going to be crazy. I've never had 4 of them in one day. Like, it is absolutely going to be madness. And I just hope all 4 print. It would suck if 2 of them go down, 2 of them go up, or 1 of them goes up, 3 of them go down. Like, you would want to see either all of us are crying together or winning together when it comes to big tech. And I would hope it's winning versus crying. So we are going to see. Word of the day. Pithy. Concise and forceful, expressive, brief, but meaningful. His take was pithy. 1 line said more than a full thread. I feel like I've heard this word before. There's no way I'm getting this wrong, right? there's like no way in hell I can get this word wrong. Pithy.
Pithy.
She said pitai or something. Like, it would be so bad. All right, there you go. That's what we got. Word of the day. I'll be back with J. Powell, 2:15 p.m. Eastern, 2:30. He's live, 2 o'clock. We get the decision. And we will transition that into the craziest day for tech earnings that we have seen, I think, honestly, in the past 5 years. It's going to be exciting. At the same time, at 4 p.m., everyone you know, your family and friends, probably have no idea that tens of trillions of dollars are going to be moving up and down. And all of us are going to be paying attention to every little syllable that we can get from these CEOs. But we do. We care. That's why we're here. Get some food, get some drinks, lock in. 2:15 Eastern. We'll be back. We got a long day ahead of us. Thank you, everybody. Appreciate it. We'll be back in a few hours. Bye, everybody.